All right. Good morning, everybody. Good morning. Happy Friday. Welcome to the room. Great to see all you guys. Insea, you're asking, should you have taken it earlier at the arrows? Let's take a look. Great question. And I really like the question, Insea. And I don't even know if I'm saying that, but I'm just trying to put those letters together. Um, so I'm going to address this two ways. Safia, good morning. Nice to see you. And I'm going to take a picture of your picture, if I may. Um, and I'm going to start with a disclaimer that I'll never tell you where to take a trade, guys. I will never tell you where the market is going to go. I'm never going to tell you what to do with your trading because it's legal. But what I'm going to do is I'm going to teach you how to read your indicators, and I'm going to give you a very basic set of rules so that you can make these decisions. So when we talk about your arrow right here, I like it. At this point, you're looking for the trade, and you're doing it because, and I'm just going to relate everything back to rules, because we have odds favorable momentum, because we have the best of the best look as far as the momentum that suggests that the market's going to continue up. You're also looking for this trade because the top of this bar hasn't reached an area, so you have your clear path. And I'm going to tell you that your large chart read is spectacular. You can't see my picture? Guys, can you see it? It looks like it's up. Ron can see it. Let me see if I can figure out how that could work on your end. If you look in the chat room, you should be able to see my picture somewhere up here in the upper left-hand side. There's also a pop-out that you can pop it out and get rid of a lot of the noise so that you can see it. But let me try just rebooting the camera and see if it picks up on your end. Give me just 1 second. All right, so I turned my camera off. I'm going to turn it back on right now. And let's see if maybe that gets it for you. All right, so my picture should have just popped up. Do you have it? Awesome, perfect, thank you. And guys, if there's anything ever challenging with the video, with the voice, with anything, make sure that you always tell me, because sometimes I can do a little adjustment. We can fix it. So, and I love that you posted this picture, because I'm going to tell you right now that this morning I had an absolute revelation regarding the education process that I'm going to share with you guys. But everything that I do when I talk about your charts is going to refer back to the basic rules, to the high probability trend rules, to those three advantages. And the first advantage says momentum, which you clearly have. The second advantage says a clear path, which you are 90% of the way through. I love this look coming from this termination condition. Everything on your large chart says that it's time to look for a trade. So rule number 3 says to take the trade at an area inside of favorable large triggers. And rule number 3 is designed this way because of the moving averages. Your trigger lines are moving averages, and areas create a bounce point. So to be honest with you, I think that you took this trade 100% perfect. And I think that is probably the textbook straight out of the lesson entry where you took it. And it's an amazing trade. And as you can see, it went all the way up to Fibonacci resistance with the conditions met. What we're looking at right here with this arrow is you probably would have had an order waiting right there. Because at that point, your large chart had already said, hey, we've got momentum, we have a clear path, everything says up. And when this reversal bar prints, you did exactly right. Your brain said, I'm looking for the entry at the area inside of favorable large triggers. And this is one of those instances where it just didn't give it to you. So while I would have been looking, I probably wouldn't have been filled either there. And then when it came back, you just kept your head in the game and you said, wow, here's the rules, here we go, and I'm going into this trade. Does that make sense? I actually believe that you took this trade beautifully, and it's 100% by the rules. And it looks wonderful. Does that help with your question a little bit? I hope so. Fantastic. And guys, I want to share with you what I realized this morning. The Nexgen education is designed to create a foundational approach for anyone and everyone in this room. And the rules that I teach in the morning are nothing more than an ability for you to recognize advantages in the market, guys. And nobody in this room is going to stay shackled to this rigid 3-rule approach. Nobody in this room is going to be held accountable by me to staying shackled to this rigid 3-rule every advantage trade. Guys, that's not how trading works. What happens when I teach you this high probability trend trade is the 3 rules that create a high probability trend trade, guys. It's the advantage of momentum, it's the advantage of a clear path, and it's the advantage of an entry area. And I feel like I say this every morning, but I probably don't say it clearly, so I'm going to rephrase a little bit. This is teaching you to read your charts. This is teaching you to be able to look at your charts and understand what's happening, to understand that the momentum is in your favor. Good morning, Jose, PFI, Debbie. It's great to see you guys. It's designed to put you in a position through simplicity to recognize advantages. Good morning, K-Dog. And then, guys, my hope for each and every one of you is that you're going to take this foundation and you're going to find the trades that are comfortable for you. You're going to find the trades that suit your risk tolerances. You're going to find the trades that are easy for you to locate. And your base knowledge, these advantages, being able to recognize strong trigger lines and being able to embrace the advantages that they provide, being able to understand a clear path so that you know if you're trading into potential trouble, and then understanding how to get into the market at the correct area. All of these are going to open the doors for you to create your trading plan. And I'm using this picture as an example. And for you guys that understand the basic 3 rules, you probably love this trade, right? Everything says down from a termination that creates a reversal. And your ability to read charts, guys, is going to have you recognize that this Fibonacci area is, in fact, the most likely spot for this trade to continue from. But it's not perfect. And this is where the black and white brains have challenges. It's not perfect because that fib isn't inside of those favorable large triggers. So if you've been with me longer than a week, guys, give me a Y if you recognize that because the fib isn't literally inside of favorable large triggers, the new users, the black and white people are going to say, but Mark, this wasn't a rules-based trade. This wasn't the best trade. How could you possibly praise this trade in the class? Because the person that took this trade recognized 25 advantages, and the only disadvantage was a 5-tick discrepancy between the large triggers and the area that was most likely to hold. So in class, ladies and gentlemen, I am obligated to say that rule number 3 isn't met. I'm obligated in class because I have people on day 1 to say, hey guys, rule number 3 is not met, right? Because the other students in class have to understand where that best advantage comes from. But I'll also say, this is an amazing trade. This is a beautiful trade. This is so many advantages in place that I'm blown away at your beautiful entry, and your management was spot on. So when I share my spreadsheet with you guys, and I say, guys, these are all great trades. Not all of these trades are going to fit your plan. Not all of these trades are going to fit your risk tolerances. Not all of these trades are going to fit just what you're comfortable with, or even the rules 100% for the high probability trend trade in some cases. And I think that I probably didn't relay that well enough. But what these trades do represent is that particular student they're understanding from that basic concepts, from those chart reads, putting them in a position to take these trades that make perfect sense for them. Ron C's trades don't make sense for a lot of people. It's not even a trade that I teach. But Ron C's trade is a wonderful chart read, and it's how he took his ability to read the charts and turn it into his trading plan that works for him. So guys, as we go through and we talk about these 3 advantages, understand that these 3 advantages are designed 100% to put you in a position to be able to read your charts. And from your chart reading, you're going to create a trading plan that lines up with your needs, that lines up with your strengths, and that has you recognizing when your strengths aren't met. And those are the trades that you'll probably avoid. And this is why trading is unique. My brain doesn't work like Sophia's brain, whose brain doesn't work like Ron's brain. So we're going to focus on everything in favor at first. And then I want you guys to break free from those shackles, and I want you to begin to look for the trades that make you comfortable. And I want you to look for the trades that make sense to you. For some of you, it's momentum trades. For some of you, it's high volume area trades. And for some of you, it's just going to be sticking to that high probability trend trade or that 50-50 trade. And every time a chart is presented in class, guys, I'm always going to reflect back to the rules, to the 3 rules, so that my brand new users understand them. Because this class is designed for the brand new users, while I can still provide feedback to you guys that are a little bit beyond. So I don't think I've done a great job of expressing that, and I apologize to you people that I'm confusing. We will take a foundational approach to learning. You guys will be able to recognize advantages, and you will understand where the market is likely to continue, where it's likely to go, where it's likely to stop. And then you're going to take those amazing concepts and you're going to turn them into a trading plan. Nexgen teaches 3 trades, guys. Nexgen teaches a momentum style trade coming right from a termination condition. It teaches an HVA trade, which also comes right from a good top or bottom, guys, and that's your first shot into the market. And then we teach a trade that's called the high probability trend trade or the medium probability 50-50 trade. And these are the ones that we have rules for. These are the ones that we've studied. These are the ones that we've gone through over and over and over again. So this is the foundation of what we teach. So if your trades fall outside, it never means that they're bad trades. It means that your chart reading has taken you to a level to where you begin to see things that present advantages, which means, yay, we did our job and we built that foundation. So, all right, without further ado, guys, and thank you for that. I needed to clear the air a little bit because you guys are amazing students and you have wonderful conversations with me and you let me know when things aren't clicking, and I will always try to adjust to make sure that you understand exactly where I'm going with this. So we're going to start with a foundation. Today we're going to look at a high probability trend trade that has the advantage of momentum, a clear path, and an entry. And we're going to take those advantages and we're going to strip them from 2 charts. Going to take a large chart that's going to define direction, it's going to define momentum, and it's going to define areas. And your large chart's going to be a broad stroke of a brush, and it's really going to set the tone. It's going to let you know what the deep pockets think. Good morning, Mike. It's going to let you know the overall opinion of the market. And guys, this is going to set the tone for everything. In your first 2 rules, your first 2 advantages for a high probability trend trade are going to happen on these charts. You're going to have the advantage of momentum, and you're also going to have the advantage of the clear path. When these rules are met, the first 2 rules are in place, the advantages are there, guys. We're just going to refine it on the smaller, faster chart to the point where the market is most likely to continue. For the high probability trend trade, that'll be areas inside of favorable large triggers, and that's rule number 3 for the high probability trend trade. We're going to whittle down 1 bar from the large chart, and we're going to break it into 15 or 30 bars on that smaller, faster chart. And it's going to help you reduce risk, and it's going to help you increase profitability. And this simple trade revolves around giving you a platform to learn to read your charts, giving you a trade that typically wins 70 to 80% of the time while you become a chart reader, while you become this independent, knowledgeable trader that you are. Because chart reading is going to be 90% of what you do during the day. And there's going to be 10% of taking trades when your advantages are met. But when you're comfortable with these chart reads, right? When you're comfortable with what you're seeing on the chart, you're going to fluently understand where the market is likely to continue. And your continuation point is going to be your entry for any trade, no matter what trade you're taking. That's going to be your point where you're entering the market because you know you have that advantage. Where the market is likely to go is going to give you an outstanding opportunity to have intelligent management choices, to use momentum, to use Fibonacci to get to that likely to go spot. And that's where you'll take profits in these trades. And then you're also going to understand where the market is likely to stop. And understanding where the market is likely to stop for a lot of you will keep you from taking that final trade into the area. For some of you, it'll set up a beautiful high probability trend trade if it reverses the market. But this understanding, this looking at your charts and getting these three basic concepts where it's likely to continue, where it's likely to go, and where it's likely to stop is going to be the foundation for your trading plan. It's going to be the basis for how you create a plan that's comfortable for you. So we're going to focus on the high probability trend trade. I'm going to go through the rules just a little bit. And we're just going to look for these advantages because these advantages are going to take you to the next level, guys. And everything starts on the large chart. And the large chart says that we need strong trigger lines. So I'm going to go to my large chart. I'm just going to take the S&P, guys. Let's use the live market today. And when we talk about strong trigger lines, I'm going to put nothing but trigger lines on the S&P. Strong trigger lines defined when your small triggers and your large triggers are separated from one another, when they're strong and angled in the direction of the trend. In this case, the S&P was in a downtrend. My small triggers are below the large are wide, they're angled in the direction of the trend. This is odds favorable momentum. This is your strong trigger look, and this is the most favorable look for you to sell a pullback to Fibonacci resistance. When the triggers are strong, the market is likely to continue in the direction of the trend. And when it's likely to continue in the direction of the trend, you're going to look for these potential entries on a smaller, faster chart. On a large chart, they appear to be tails or wicks. And you're going to be able to pinpoint where the market is likely to continue when this advantage is in place by using a smaller, faster chart. In an uptrend, small triggers will break above the large triggers. The separation between the two lets me know that the odds are favorable for the market to continue up. And once again, when we have this odds favorable momentum, it is the absolute highest probability scenario for looking for a potential entry on a smaller, faster chart. And if you scroll back, you'll see in sustained trends, you may lose that momentum, but that odds favorable momentum tends to always come back. At some point, you're going to get those trigger line separation. You're going to get that advantage. And if you look at the market right now, you can see that that separation is beginning to happen live in front of you. So I'm going to put my indicators back on. But guys, is everybody comfortable with this first concept? Odds favorable momentum. I'm going to try to get through the rules a little quicker today. I don't have any first day people in here, I believe. Maybe I do. If I do, let me know. But that odds favorable momentum is going to set the tone, guys. It's going to get you in a position where the market is most likely to continue in the direction of the trend. This is rule number one. This is your first advantage. And this advantage of momentum, guys, what you're going to find is going to create opportunities beyond the high probability trend trade, because a market that's likely to continue, momentum strongest is like a semi going down the highway at 100 miles an hour. It takes a minute to stop that momentum. You'll be able to recognize the slowdown when the small triggers begin to return to the large triggers. And when they begin to return to the large triggers, the triggers are weakening. You go from strong to weak. And when you have weakened triggers, when they work their way inside of the triggers, you find yourself in a position where anything can happen up or down. You've taken away that advantage of momentum. And it means that 1/3 of the equation is no longer in play for the recipe for a high probability trend trade. So your trades may venture off into what we call medium probability trend trades, the trades where an issue exists. But we still have two very clear advantages. And it doesn't mean that there isn't a trade that can happen. It just means that it's not as likely to push in the direction of the trend. And you'll notice that when these trigger lines are weakened, when we have that anything can happen look, very often this is a precursor to a reversal in the market. It typically coincides with Fibonacci. And when this reversal heads the other way and begins to pick up steam, you'll see those strong triggers again. You'll see those pullbacks or those tails on your larger, faster chart. And we're going to show you in the next 20 minutes here how to capitalize on those, how to use a smaller, faster chart to pinpoint where these tails are likely to happen with all that momentum and enter the market. So guys, rule number one is going to give you strong triggers. Small's above the large will be wide, and they'll be angled in the direction of the trend. You'll see it on the S&P. Whoops. You won't see it on my untitled workspace. There we go. There it was in crude oil. There it was again in crude oil. Everything staying up, everything strong, and it continued right to Fibonacci resistance. And it came directly from Fibonacci resistance. And these are what we call termination conditions, guys. And these are going to be rule number 2. Rule number 2 is going to have you identifying a clear path. It's going to have you understanding where the market is likely to stop, where the market may reverse, where the market may have a reaction that becomes untradeable for you. And you're going to hear the phrase tops and bottoms a lot. Fibonacci tops and bottoms, also termination conditions, may reverse the market. And these termination conditions are going to come in the form of blue Fibonacci support or red Fibonacci resistance, yellow 1-to-1 dots, a cyan divergence low line, or a magenta divergence high line. Guys, you're going to see all of these on a large chart. The large chart is going to lead the way. In these areas, just visually, look like this. Divergence highs are the magenta lines that form when a market begins to lose momentum. And the divergence line on its own is not a pivot stop out. It takes the recipe for termination conditions to create that. You're going to see divergence lows. It's just a loss of momentum coming from a pivot. Red resistance, blue support, yellow 1-to-1s. These are the areas I'm going to have you guys looking for. And we're going to use a simple recipe to understand whether or not these areas are likely to stop the market if the termination condition rule is true. When the market's trading into and trending up, there's a two-part process that happens. First, price reaches an area, meaning that these dynamic Renko price bars, show me a picture PFI, it'll make it easier for me. Is it a termination condition that creates a full reversal? Ask yourself those questions. First, it has to be a termination condition. Price reaches this divergence high. All the trigger lines remain below. Now I have a termination condition on my large chart. If this termination condition creates a full reversal in the market, well, then it's what we call a good bottom or a good top or a strong top. A termination condition that creates a full reversal is a strong top or bottom. Price reaches Fibonacci resistance. All you have to do is ask yourself, where are my trigger lines? If all of your trigger lines, both large and small, remain below that area of Fibonacci resistance, this is an area that may reverse the market, that may create a bounce. This is rule number 2, keeping you safe. No more long trades into the area because it may create a bounce and it may create a reversal. And then the final picture in the highs, price reaches these yellow 1-to-1s. The price bars, dynamic Renko bars, come up to that area of resistance, those yellow 1-to-1s. And when they do, the trigger lines are unable to break through the area. So we know in the moment that this is an area that may stop the market, that may reverse the market, that may create that large bounce. And we're not taking trades into it because the path is no longer clear. There's kind of this brick wall right in the way. And the same is true at Fibonacci lows. Let's see if I got that picture in there. I'm giving you these so that you can have them just for reference as you go through the weekend and study a little bit. The first thing that must happen is price reaches the area. The dynamic Renko bars come down, come in contact with, or a tick away from these areas of support. In this case, it's yellow 1-to-1s. All of the trigger lines remain above those yellow 1-to-1s, and this is my indication. Don't take a trade into that area. Don't take that short trade because it may bounce or it may reverse. And if it reverses, the termination creates a full reversal. Well, now I have what's called a strong bottom, and this is the precursor for the highest probability trend trade you can take. This is the precursor for setting up advantages on medium probability trades coming from the area. Price reaches support, trigger lines remain above, no more short trades, it's just a little safeguard. Here's one of those divergence lows. Not a termination condition on its own, but when price reaches it and the trigger lines remain above, now we have what's called a pivot stop out of a divergence low, and this is, in fact, a termination condition. And if that termination condition creates a full reversal, well, then we have what we call a strong bottom. So what we have here is the small and the large kind of breached a little bit, right? A little bit of overrun coming through. So PFI, from the purest sense of the word, price reached the area and the trigger lines begin to overrun a little bit. This is a little overrun of the Fibonacci area. And this is where you can use those three divergences to help you out. Guys, these are areas, and sometimes that strength pushes through a little bit. Do you notice how when your large triggers come back above, you never do anything below? And now we're heading that other way with odds favorable momentum. PFI, this is a recognition of a little bit of overrun of the area. Just like this is a little overrun of the area. And then when everything reverses and the fibs get to the other side, we're going to say we have a bottom in place. Does that make sense? But for the purest terms of a good top or bottom, we're gonna keep it really simple and focused initially. And it's going to be that termination condition with no triggers through that creates a full reversal, and a termination condition with no triggers through. And guys, this is your foundation for a strong top or bottom. And then you're going to get to a point in your study where you do exactly what PFI does, where PFI says it was weak and it overran a few ticks, but everything's reversed from this bottom. It's time to look for longs. Does that make sense, PFI? And you're always okay to interrupt. And just like John said, these are kind of windows, right? These Fibonacci areas come together from a mass of calculations, thousands of calculations. So they're a window. And exactly, PFI, if there were no fibs here, it would just be a pivot with a loss of momentum. Wouldn't be considered a strong bottom. But because it coincides with Fibonacci support, that little bit of overrun is okay. Awesome. Great question, guys. Great question. So we use it to talk about whether or not we have a clear path. We use it to talk about whether or not that advantage is in place. Termination conditions may stop the market. Termination conditions may reverse the market. Termination conditions may create an untradeable bounce. So for the brand new user, we talk about it in very basic terms. We talk about it if price reaches the area, no trigger lines break, well, then it's not a clear path anymore. We have to sit on our hands and wait for just a moment. Is the area going to break or is it going to reverse, right? And what you see often is that the market stutters at these key areas. You see it right here. It goes up, comes down, and then ultimately breaks. We know that it's broken because both the small and the large triggers get to the other side of this Fibonacci area of resistance. Price reaches and no triggers break, no clear path. Small and large break through. Now the path is clear. And guys, this is your foundational approach. This is going to get you recognizing and understanding these termination conditions in the moment, keeping it simple. And then you're going to break outside of simplicity because you're all amazing students. You understand the idea that no triggers through is a moment to pause, to wait because the path isn't clear. When both the small and the large break through, you know that the path is clear and it's time to look for those rules to be met. And there's that odds favorable momentum in a tail. And then each and every one of you is going to grow into this idea that strong triggers break things, that strong triggers can make it through Fibonacci areas. And if they didn't, the market would bounce between two lines for eternity. So when the small triggers break through an area and they have that odds favorable momentum, that best of the best trigger look, that strongest likely to continue in the direction of the trend momentum, these areas do in fact have the potential to break. And you're using the smalls through and the larger not, coupled with odds favorable momentum. The potential is present, but it's not broken yet. So for the brand new user, I want you to embrace the idea that the clear path is not present on an area with the potential to break. So you're going to rely on momentum and you're going to rely on a great entry and see if it carries you through to the other side. There's one of those tails with all that momentum, and sure enough, the triggers break. And there's one of those tails with all that momentum, but the area doesn't. So when we go through and we talk about entries, guys, I'm going to give you the recipe for the highest probability entry on one of these, what we call 50-50 trades. 50% of the triggers through and 50% not. This is what we call a medium probability trade. This is a trade where an issue exists, and that issue is that the path isn't clear yet. But I'm going to give you the recipe for success, and then from that basic recipe of success, you're going to expand into a whole new world where your trades will probably never look like anybody else's because you're going to find your comfort zone. So is everybody good with that basic recipe? If price reaches an area, none of the trigger lines break through, guys, let's sit on our hands. Let's wait and see what happens. Is it going to be a bounce? Is it going to break? Or is it going to reverse? Those are the three options. PFI says that we're seeing one on crude oil right now. Price reached Fibonacci resistance. Absolutely no triggers break through. Even with that odds favorable momentum, the smalls can't get above resistance. And the market pushes all the way back down to Fibonacci support. At which point, all the trigger lines remain above. 90% of what you do during the day is going to be recognizing patterns and waiting for advantages. And what's pretty amazing is that if you look at this picture right here, it shows you why a termination condition gives you reason to pause. Because it may create a bounce that's untradeable. And that picture looks very much like the picture from the manual. Whoops, wrong picture, I apologize. Price reaches resistance. And Jay Solar, thank you for that. Appreciate that very much. And just like every other human in the world, guys, I'm going to have challenging days, and I apologize if I ever do. Price reaches resistance, and absolutely no trigger lines break through. And Jay Solar, enjoy your travels. I hope they're for fun and not for work. No long trades, it keeps you safe, and the market pushes back down to support. And what happens is all the trigger lines remain above. So you're sitting on your hands and you're waiting for these wonderful opportunities. You're waiting for these advantages. Price pulls back up to resistance, a divergence high. None of the trigger lines break through. Gosh, there's that amazing termination condition that creates the full reversal, that gives you that odds favorable momentum, that turn of the large triggers. There's one of those tails with a clear path, possibly your highest probability entry for a trade. So guys, termination conditions are designed to keep you safe, to keep you from taking that last trade into the area that may reverse the market. Termination conditions are also designed to create an anchor for that highest probability trend trade when the market reverses and gives you odds favorable and gives you one of those tails. So 2/3 of the recipe are met, right? We have momentum through strong triggers. We have a clear path because we're not trading directly into termination conditions. So guys, let's refine it. Let's find the area where the market is most likely to continue. Notice that I don't say where the market is definitively going to continue. It's where the market is most likely to continue. And where the market is most likely to continue is where rule number 3 comes into play. And rule number 3 says that you're going to use a limit order to buy or sell a pullback, a small retracement in price at an area inside a favorable large trigger. So I'm going to use a limit order, meaning that I'm literally going to wait for the market to come back to me. And I'm going to have the market come back to an area inside of favorable large triggers. When everything says up, I want the market to come down. That little push against the overall trend, that little push against momentum. And I want it to come down to an area. Fibs, mid-bands, or yellow 1-to-1s, and I want that area to be inside of favorable large triggers. When the large and synthetic triggers on that smaller, faster chart come together, it's going to create the smallest window of opportunity. And this is your best of the best look, new users, for the perfect entry, right? For that rules-based foundational approach entry. And we're going to teach you how, I'm going to teach you how to recognize it in the moment. And you're going to recognize it because the rules are met on the large chart and you're watching your small chart and the large and the synthetic triggers are up and they're strong. And you're focusing your attention on the areas that may fall within, fibs, mid-bands, yellow 1-to-1s. And everything on this chart suggests that the market is going up. The trigger lines are strong. The background is green. I have every advantage in place, and this is when you make the decision it's time to look for an entry. Rule number 3 says use a limit order to buy or sell a pullback, a small retracement in price counter to the underlying trend. And we're going to buy it at an area inside of favorable large triggers. So from mid bands, fibs, yellow 1-to-1s, these become our bounce point to get into the market. When this reversal bar prints, you're going to create what I call the window of opportunity, the area where the market is likely to continue. That point where that trend is most likely to keep going in the direction of the momentum, where the trend is most likely to keep going in that clear path. Your window of opportunity for entry, guys, it extends in a long trade when you're buying the market from the highest point of support to the lowest point of support. From this mid band, which is a tick or two above these large triggers, which are coming up like a shark about to breach, to the yellow 1-to-1s. And guys, when this reversal bar happens, when this window of opportunity is created, you're going to right click on your chart and you're going to activate a limit order. You're literally going to sit on your hands and wait and see, is the market going to come back to my entry? And if it does, you're going to find yourself in a long position. You're in a position with the advantage of momentum that's been dictated by your largest chart through strong triggers. You're in a position because there's no termination conditions. There's nothing in your way. The path is clear, dictated by your largest chart. And then finally, you're in a trade because you took the area inside of favorable large triggers. You waited with a limit order, and now you have the advantage of entering where the market is most likely to continue. And guys, in a perfect world, this is your look. And you're not in control of whether or not the market comes back. You're not in control of whether or not your order is filled. The only thing you're in control of is whether or not your rules are met and whether or not you decide to pull the trigger. The market comes back and reaches 79.21 and you're in this trade. It's right at the top of the window. Your window is defined by first looking at those favorable large triggers, and then second, identifying your highest point of support to your lowest point of support. And this yellow box represents where the market is most likely to continue. So when the market hits the top of it because of the momentum, you're in the trade, but your brain is already saying, but this trade may go to the bottom of the window. This is an area where the market is likely to continue. It may go from the top, it may go from the bottom, but I do know that it's most likely to continue from there. And then this is where stops come in. This is where we protect our investment. You can put a protective stop below the window of opportunity. You can put that stop typically about 12 to 14 ticks for futures traders outside of the window where the market shouldn't go. Because if it does go to that spot, if it does extend beyond the window, if it does hit that 12 to 14 ticks, guys, you no longer want to be in this trade. What you're doing is you're protecting your investment. You're protecting your equity. You've given yourself a trade that typically wins 70 to 80% of the time, right? Because of all the advantages in place. And I want every trader in this room to realize that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30. It's a cost of doing business. It's okay. And as you develop a trust with the rules, as you develop repetition where you see this trade happen over and over again, you're going to understand that the advantages in place give you an opportunity to win more than you lose. And you're going to find yourself okay with this 20 to 30%. Nobody likes losing, but you understand that it's acceptable, that it's a normal part of a positive equity curve. But the best part is, with all these advantages in place, you also go into the trade understanding that 70 to 80% of the time, this is your typical outcome. This is a trade that wins more than it loses. This is a trade that creates confidence through success. But the most important thing is this is a trade that teaches you to read your indicators, guys. It teaches you to read your charts. And it teaches you to take those very basic advantages, that very basic trade, and then grow outside of it. Because the more advantages that you recognize, the better your chart reads are, the easier it is for you to take advantage of other scenarios. So I always encourage new users, give me 20 days of focusing on the high probability trend trade. Learn to get comfortable with the information that your charts are telling you. And then from that foundation, you're going to have an understanding of the basic rules, the advantages they provide, and that is where you're going to start seeing people taking trades that maybe don't fit the rules 100%. And you're going to say to yourself, but that's not rule number 3, Mark. That's not an area inside of favorable large triggers. But you're going to say, but wait, it was a termination that created a full reversal. and it was odds favorable momentum, and it was no divergence and strong triggers and plenty of room to the fib. And I'm not going to let, because of my ability to read charts, I'm not going to let 2 ticks outside of a mid band or outside of triggers keep me out of this trade, because it has so many advantages present. John Novak used to talk about the bar fight. You have trend, you have a termination creating reversal, you have odds favorable momentum, your triggers are smashing through the area, everything says down. Are you going to let 2 ticks keep you from your money, right? Are you going to let 2 ticks keep you from that trade? And guys, this is what I've realized, and this is where I really wanted to let you guys know, is this basic chart reading is going to take you to a point to where you begin to exceed the limitations of the high probability trend trade, where you start to recognize the advantages and make intelligent decisions for your trading plan based on those advantages. You can study the high probability trend trade by scrolling back on your charts and recognizing odds favorable momentum and pullbacks to areas inside of favorable large triggers. See if I can find a good look of one. Dun, dun, dun. This is the S&P. Just want to put one together right here. Middle of the night. This is your study tool, guys. Let me scroll back to it. If you circle a tail on your large chart, it'll show up on your small chart. Small's below the large are wide, they're angled in the direction of the trend. Everything says down with great momentum straight from a termination condition. Notice how the top of this tail, it coincides with resistance inside of favorable large triggers. This is one of those 50-50 trades. This is one of those trades where this area has all the potential in the world to break because of the momentum, because of the termination that creates a full reversal. And over here, there's a couple slowdowns with divergence, and some of you won't take this trade initially. Some of you will say, the most basic plan that was provided to me says don't take this trade because of divergence. But as you grow with the software, you're going to understand that a great top creates an advantage. And you may still enter the trade at the perfect spot. You still have the advantage of momentum. You still have the advantage of an entry area. You just don't have the clear path. You have strong triggers, and your chart reading will take you to the next level. And PFI says, everything says up, smalls are outside, and it just didn't make it to your area, right? Should I have taken this entry? Where would you have taken it, PFI? Would you taken it at this bar? Or would you have taken it at this bar? Or would you taken the close above? And then PFI, the flip side of that is, where shouldn't the market go? All the way down here, right? So this is a question that you have to answer for yourself. With the momentum, with everything going up and Fibonacci looming in the distance, if it doesn't catch your entry, how much are you willing to add on to that trade and risk? If it comes down and creates this bar, and you're like, oh my gosh, it might be going without me, you're more than welcome to jump in. But understand that there's always the potential that it's going to come back to that mid-band inside of favorable large triggers, which means that your risk still has to go below that window. Does that make sense? So PFI, this would be an opportunity for you to determine whether or not that's acceptable risk to make 11 ticks to Fibonacci resistance. Are you willing to risk that much money for such a short trip to get to that Fibonacci area? Because if I'm in at 06, I run into problems at 15. Does that make sense? And this is the part that I can't give you guys. Deciding what is worth the risk, right? I can talk to you about advantages. I can talk to you about momentum. I can talk about where the market's likely to go through Fibonacci. And I can talk about where the market is likely to bounce. And then you guys are going to turn it into an amazing plan. You're going to turn it into a trading plan that is chock full of advantages, that embraces your ability to read a chart, and that is comfortable for you. I'm going to give you guys a checklist for a high probability trend trade this morning. And this is helping brand new users focus on the advantages that are in place. Whoops. This is a checklist that lets you determine whether or not you have momentum, whether or not you have a clear path, and whether or not you have an area inside of favorable large triggers. It also asks, is it a termination that creates a full reversal? Is it a good top or bottom? And here's an amazing video. And guys, this is your homework for the weekend, is watch this video on tops and bottoms, because it's going to create a lot of clarity on when these areas are likely to break and when they're likely to hold. And if you follow all of the rules, 100%, guys, this is a trade that typically wins 70 to 80% of the time. More importantly, this is a trade that visually teaches you to recognize these conditions that create advantages. There's your termination that creates a full reversal. There's your strong trigger lines. There's the idea of areas not broken and areas broken, and then the areas with the potential to break. And then here's a roadmap to defining that area where the market is most likely to continue. And this is another checklist, guys. It's the exact same rules. Visually, it pulls from the resource material. So if the brand new user spends 20 days looking for that perfect entry, PFI, you're not going to take this one because your brain's going to tell you that it's not rules met. And if you're a brand new user and you're committed to those 100% rules, you may not take this trade because your brain is going to tell you that it's not rules met. But your ability to learn these rules, to read your charts, to identify these advantages in the moment, ultimately is going to get you to where you'll never miss this trade, because it's a beautiful opportunity. Whoops, wrong one. And then, guys, finally, I'm going to give you, and I want to get to the live charts quick today, and this is why we're moving. So if you have a question, be sure to ask. This is a simple plan for consistency. This is a simple plan that's dedicated to the new user, that's embracing the idea that the average person needs to grab a hold of this foundation and then grow from that foundation into trades that make them comfortable. And this one says, this is the simple plan for consistency right out of the gates, guys. Don't fight that large chart direction or momentum, because the average new user, if you can simply trade with the trend and make sure that you have the advantage of momentum, it's going to clean up a lot of mistakes and it's going to present a lot of opportunities. So for 20 days, you can define your entry. Getting in at the right spot creates a very manageable trade. And it all revolves around the high probability trend trade, this trade that teaches you to read your charts. Stick to this trade for 20 days, learn your entries, and really understand the flow of the market. Understand how momentum pushes it. Understand how termination conditions may stop it. And understand how market likes to pull back to these key areas. And what it's going to do is it's just going to set you up to be a great chart reader. But you want to manage the trade, right? You want to get into the trade. Ultimately, we're all here to make money. It has been shown over time that a mechanical approach to management for the new user removes opinions. It removes emotion, right? It allows you to be consistent with a very pragmatic approach. And it's using that initial stop outside of the window of opportunity. Acceptable risk on a high probability trend trade. You're taking that trade, your stop is in place, and there's nothing for the new user to do here. You're either going to get stopped out on one of those 20 to 30%, or the market is going to give you a reversal bar. And if the market gives you a reversal bar, you're going to manage your risk. You're going to reduce your risk 2 ticks above that reversal bar. Or if it's a long trade, 2 ticks below that reversal bar. And once again, you're just going to allow yourself to be in a spot where there's nothing for you to do. Either the trade is going to go in the direction and it's going to hit your first target, or it's going to come back and it's going to stop you out for a smaller loss. But if it hits your first target, guys, this is a $100 trade. Your first target is set simply at $100. And it doesn't feel like a lot of money, right? But $100 creates a dopamine kick. It gives you a serotonin response. It creates confidence through the memory of success. And once that target is hit, that's $100 in your account. That's $100 that they're not going to take from you if nothing else works out in this trade. $100 makes you feel good. And what it does is it allows you to hold for that second contract with all the advantages on the large chart. It teaches your brain to trust the large chart, to trust the advantages, to trust that momentum and that clear path. You're going to put your stop to break even. because there's nothing to lose. And again, that helps you to hold this position. And if it makes that second contract, guys, on 2 contracts, 1 trade, 3 advantages, it's a $300 trade, guys. And one $300 trade a day is a $6,000 a month. And it's a $72,000 a year. And the idea is for the new user to just be pragmatic in the beginning, to just be mechanical, to give yourself the highest chance of success so that you can build repetition through recognition, so that you can begin to understand the different patterns that present themselves, so that you can develop a trading plan that suits your needs. And you'll do that by taking a lot of pictures. Every trade that you take, post in the room, I'll give you feedback. And I'll revolve it around the rules that we have. And then I'll spend a lot of time talking about the advantages that were present outside of the rules. So a lot of you newer users are going to see me high-fiving people on great trades because they're great trades for them. And they typically stem from the advantages that these more experienced users learned from the high probability trend trade. You're going to put every trade you take into a spreadsheet. You're going to create a trade journal, guys. And you're going to use that journal every day as a study tool. And you're going to use that study tool. You're just going to go back and look at yesterday's trades. What worked? Guys, this is how I create deviations to plans for myself. I look at what worked and I looked at what didn't work. A lot of you NASDAQ traders hear me talking about never fighting those strong small triggers. That's because my spreadsheet told me that that doesn't work. So I went back and I did study and I looked to create a pattern that fit my needs and turned the what didn't work into a scenario that did work. And when you use the spreadsheet, you'll begin to recognize those patterns. You'll find that what feels easy and keeps you confident and relaxed are typically the ones that stem from those patterns that have been proven over time to create success. And what feels forced and creates nerves are those patterns where you fight those things that made you comfortable, where you fight those things that have been working for you. My nervous trades fight trends. And I find myself, I hope this works. My nervous trades fight momentum, where I'm saying, I sure hope this area holds, even though I'm fighting momentum. Guys, those are the ones that make me nervous. I've recognized my patterns and I've formulated a trading plan that embraces my strengths and abandons my weaknesses. I don't take Ron's trades because it's a weakness for me. I don't take those momentum style trades. My brain can't wrap around it. I can analyze it. I can embrace the advantages, but in my own personal life, I find that I struggle with the entries. I don't know why. I just do. So his trade's not my trade. I can appreciate his trade. I can recognize the advantages in his trade, but I'm not going to take his trade. I'm going to stay focused on my strengths. The next thing the spreadsheet does for you is it gives you an opportunity to take advantages, take the rules being met, and take pictures of them. And guys, there's about 250 pictures in here. I'm going to say 70% of them are 100% by the rules. Anytime it says high probability trend trade, you're looking at a great rule. You're looking at a great entry that embraces advantages. And you'll notice that I put the names next to 90% of them, guys. And it's not because this is your perfect trade. It's because it's Mark W's perfect long. And what does it look like? It looks like smalls breaking above the area and the larger not, and there's no divergence, and there's a tiny entry. And some of you aren't going to take this trade in the beginning because the path isn't completely broken. And then some of you won't take this trade because it's not coming from a good top or a good bottom. And ultimately, some of you are going to take this trade because you're going to say, I can stack enough advantages together to justify taking this trade with this momentum to get to the next area. So Mark W's trade isn't a perfect high probability trend trade, but Mark W's trade is the perfect trade for Mark because he can embrace the ideas in the moment and take advantage of them because of his study with a high probability trend trade. So when you look at these pictures in the spreadsheet, and I'm going to give you the spreadsheet, I want you to embrace the idea that you're searching for advantages. You're searching for reasons that these trades were successful. You're searching for the reasons that market moved on to the next target, because if you focus on the strengths they're going to turn into strengths for you. So guys, this is my first hour every day. As we talk about the advantages, we talk about what we see, and we stress emphatically from this day forward that the idea isn't to shackle you to a plan, but the idea is to create a foundation that allows you to create your own plan. So when we talk about that keep it simple trading plan, this helps you do that. And then guys, I've also added the 50-50 trade, that trade where an area has the potential to break. And I've given the best case scenario for it, guys. The absolute best case scenario, the scenario where the momentum is strongest on both charts, where there's no divergence, no loss of momentum on that smaller chart, where you're coming from a good top or bottom, and where you're entering at the area inside of favorable large triggers, guys. And this is the best case scenario. And the best case scenario says that if there's divergence, there's no trade. However, as you grow with the software and you recognize advantages, you may forego one of these and create a plan that works for you. So you're not held accountable to the plan that I provide you. You're held accountable to the plan that you provide me, that you say is working for you, right? And that's what we're going to do. And then because it's medium probability, it'll be managed just a little bit differently. But your chart reading will have you do that over and over. How would I handle this, Tim? So what do we have? I'll tell you exactly how I would handle it, and then we'll see how you would handle it. Maybe they correspond. So I always start on my large chart, Tim, and this is my process. This is how I go through. This divergence isn't a good top. This divergence is a pivot that has lost momentum. And Tim, I already appreciate the question because I think that it's going to open a door for a great conversation. If I go back to tops and bottoms and I go back to termination conditions, I'm going to go back to the rules right here. One of these pivots that doesn't come from an area, right? One of these pivots that's just kind of happening when the market goes from down to up. Tim, this is a loss of momentum at that pivot. And that's what you have happening here. You have a loss of momentum at a pivot. But it's not a termination condition yet. Because the recipe for a termination condition is that price has to reach that area. So, Tim, for that to be a good top in your picture, we'd want to see price bounce back up, reach that divergence high, and all of our trigger lines remain below. Does that make sense, Tim? Here it's a loss of momentum, kind of coming from the middle of nowhere. And because it's coming from the middle of nowhere, this mid-band, this support this is our first area. This divergence pushed the market back to Fibonacci support. And right now, none of our trigger lines are through. So what I'm seeing is a termination condition to the downside. That's okay. Tim, I'm going to tell you right now, you're going to get confused and you're going to exchange ideas with one or the other. And as long as you keep asking questions, we'll keep circling back to the basic rules to get that understanding. So from here, this loss of momentum, it created odds favorable momentum, right? Small's below the large are wide, they're angled in the direction of the trend. But then price reached Fibonacci support. And when it reached it, none of the trigger lines have broken through yet. So on that same concept, of going back to the user guide, going back to termination conditions, price reached Fibonacci support, the trigger lines remained above. Therefore, this isn't a clear path. This isn't a clear shot to the downside. Do you see how both lines of your small triggers are kind of straddling it? But in order for this to be a 50-50, we'd want to see the small triggers break through with some authority, Tim. Does that make sense? So my large chart tells me that the market's cranking down. I've got odds favorable momentum. I'm in a downtrend. The large chart tells me that I've reached a termination condition. So how would I handle it? If I am a high probability trend trader, I'm just sitting on my hands to see if this area breaks. That's all I'm doing. I'm just kind of holding off and saying, you know what? It's either going to break or it's going to bounce. And let's go to crude oil right now because I'm sure that this is recent. And I have a couple fibs that you don't. So when it reached Fibonacci support, look at the momentum. Momentum carries it through support. Momentum turns support into resistance. The area breaks. Some people, when the small triggers break through, Tim, now it's a 50-50. And that 50-50, there was your potential entry if you decided to take it. If you're a high probability trend trader, now we have odds favorable momentum. And now we have no termination conditions because the small and the large have cleared our area. And now if I'm looking for a window of opportunity, it's going to extend from my lowest point of resistance inside of favorable large triggers to my highest point of resistance inside of favorable large triggers. And the beauty of that is I've got one line inside of those favorable large triggers. Do you see it? So guys, this would be what we call a pre-trade picture. This would be a picture before the entry. This would be a picture with the rules met. And you can go back and you can write them, right? Let's reinforce through annotation. I have odds favorable momentum. The path is clear. Here is my window of opportunity, right? And then the cool thing is, guys, is this is a great reminder. When the path is clear on my large chart, I'm not concerned about this Fibonacci area over on my small chart. What I'm hoping this does is give me a bounce back to my area inside of favorable large triggers. Areas, direction, and momentum happen on the large chart. And it's still going down, and you can see that my window is moved a little lower, so I'm going to drop this right here. And look how that fib printed. So now what are we doing? Now we're seeing kind of that 50-50 because we had our fib update. So by the rules, of termination conditions, when all of these triggers are cranking through, look how far through the area they are. Doesn't it make sense that this could be a potential area for a bounce? So as this mid-band comes down, I'm going to be a couple ticks below it, and I'm just hoping for a reversal bar. I'm hoping for an opportunity to enter this market based on the rules. And it just never happens. Here it goes. The market continues to crank down, right? So I'm like, dag nabbit, my rules didn't get met. Here we go. I'm just going to wait for the next best opportunity. But it was my chart reading that got me where I was looking for the trade. Tim, does that help a little bit in the moment? So here we had a bad bottom. The market isn't turning from fibs. All the trigger lines were through. Trade never started PFI. It pulls all the way back to a mid-band, and the large triggers don't follow. So PFI, if it turns now, are the rules met for a trade? Let's look at it. If it turns right now, what do your rules say? Do you have, here's that separation. The smalls are returning a little bit, right? And I have a fib right here. Do you see how that fib printed from the update? Isn't this a potential bounce area? Isn't this an area with the potential to break, but it hasn't broken yet? So let's just use chart reading. I don't really have a clear path in the moment. But let's look over here. Without the clear path, do I have odds favorable momentum? Are my smalls separated wide, ready to smash through this area? Or it just started printing at the 10 a.m. update, Jose? Or is it kind of like, the smalls returned? The move is weakening a little bit, right? So we're going through this from the new user mentality. I know this isn't my best trigger look because this is my best trigger look. 79.79. I've got it at 84, Tony. Right here. So now I don't have the best momentum and I don't have a clear path and I have divergence, right? So PFI, this is where you go from high probability trend trade. Price pulls back to resistance. All the trigger lines are below. 80 has the potential to hold, but I don't have the clear path, right? I have a mid-band, a place for it to bounce, but I don't have the best of the best look. And this is where it goes next level. Are you willing to enter at a fib on the large chart with all the triggers below? Are you willing to enter with the smalls below the large? Are you willing to enter and take a small risk shot at an area on your small chart because of the look on the large? And if you are, this fib becomes your first trouble spot, right? This is where you're going to look for an opportunity to manage, and it's either going to give you the opportunity or it's not. So the brand new users, probably not your trade. The chart readers with confidence through recognition, the chart readers that say if price reaches resistance and all my trigger lines are below, it's likely to stop the market. And then when all of my triggers are below that area and that area lines up with a mid-band, maybe I'll get in at 98 and I'll take profits at 88 and I'll get to break even. And then if that area does in fact hold, maybe I'll exit the trade with a second divergence. Does that make sense to everybody? We started our chart reading with the foundational approach, the things you're going to learn through the high probability trend trade. And then you get to make decisions on whether or not that's the best look for you. You get to make decisions on whether or not you're willing to put a little bit of risk on a trade when your large chart looks like this. And then guys, if you present this trade in the class, this is what I'm going to do. I'm going to talk about the advantages and I'm going to talk about the disadvantages. And I'm going to praise your entry, or I'm going to say this was the challenge with it. And then you're going to grow from your plan, right? And this is why I like you guys to write rules on the chart, because it lets me know what you're thinking. So PFI, if I took this trade and presented it to John Novak in class, this is what I would do. I would draw a big arrow, and I would say my smalls are outside but not perfect. I would say, but all triggers are down and below 80. Term condition says 80 may stop the market. So does that make sense? So what I'm doing is I'm analyzing and I'm saying, this is what I see, Mark. This is why I did what I did. And then for me, I would say, took my entry at the mid-band because it lined up with fib with potential to hold. Stop behind the reversal bar marker on large chart, right? So I had like an 06, 07 stop. And then I'd talk about my management because I know that that's my trouble spot, right? So I would say, this is my trouble spot. I'll take half off here and go break even because I'm identifying that this may stop the market. I can see it right here, right? So I'm not going to try and hit a home run. But what I'm going to do, PFI, is I'm going to take this trade and I'm going to post it in the room. And PFI, if you have the microphone, you're going to be able to see exactly what I'm thinking, right? You're going to say, oh, I see why you did this. I see why you chose that entry. I see why you took this trade. This may be the perfect trade for Mark Novak. But this isn't a high probability trend trade. And because I have brand new users in the class, let me show you how the momentum isn't the most advantageous. Let me show you how the area isn't completely broken. Let me help you identify these very key concepts so that you can break out of them and understand when a trade has to be managed. So guys, do you see how that fib is in fact holding, isn't it? And you probably took quick profits at the problem spot and you got to a zero loss level, and now you're sitting on your hands waiting to see which one of these fibs wins. And guys, that's Nexgen. We're going to build you up with a foundation. We're going to give you everything you need to learn how to read charts. And then once you're a chart reader, your plan is going to grow with you. Your plan is going to grow the way you grow. I have a trader that doesn't see short trades, can't for the life of them see short trades, but never misses an awesome opportunity at a long. I don't have a set of rules for that, but he does. He says don't take a trade when the background is red because you're going to make a mistake. Something about it is a weakness, right? Some people say that when I have this much momentum and a clear path, they don't wait for a pullback. They clear their areas and they take quick profits, and that works great for them. And some people are super patient and they're willing to sit on their hands for 3 hours and wait for the absolute best of the best. So I don't like strawberry ice cream. I know, right, Gary? But it doesn't mean that strawberry ice cream isn't perfect for you. I don't care for heights. Doesn't mean that my skydivers are doing something wrong. So, guys, that's the idea behind Nexgen. The idea is to help you build a foundation, to make you a chart reader, to give you a simple plan to focus on until you're capable of writing your own. So there are no wrong trades in this classroom. There are no, that's not right. There's only maybe that's not right for me. Gary. I don't know. All the skydivers I know love it. So, guys, that's the first hour. I'm going to take a second. I'm going to go refill my water real quick, stretch my legs, roll my neck. Then we're going to go back and we're going to start looking at the pictures in the room, and we're going to talk about the live market. And we're not going to talk about whether there's a trade or whether there's not a trade. We're going to talk about those basic advantages, right? Those basic advantages that are coming from the foundation, and whether or not advantages are present, whether or not the rules are met to take a trade. So I'll be back in 5, guys. If you have any questions, post them in the room. If you have any concerns, post them in the room. If you have any charts, post them in the room. We're going to come back and we're going to go through all of them. let's get back to the fun stuff. Let's look at some charts. Let's look at everything you guys are doing. Let's relate them back to the rules that we just discussed. And then let's look for advantages, guys. Let's focus on why things worked. So even if it's outside of the rules, I'm going to scroll to the top. This is what it looks like. So I'm going to look at a chart or two, and then I'm going to scroll down so I don't miss questions. But if I do miss a question or I do miss a chart, guys, please just let me know. Go, hey, Mark, I think you missed something there. I think at 9:42 I had a post. Ron got us started. And guys, I'll love it. This is Ron's style trade, right? Nexgen doesn't teach this trade. This isn't one of our trades. This is Ron being a chart reader. This is Ron saying that with this momentum and with this clear path, two basic concepts that come from that high probability trend trade, he says with that same momentum on a smaller, faster chart, all of my study has told me that it typically moves at least $100 worth of profit. And this is a trade that he has capitalized on every day. His trades look the same. And then this morning he said, same trade, more contracts. So guys, he takes a 6 lot here. And he takes, what is that? 3.5 points? 4.5 points. Right? $1,000 trade, guys. 10 minutes of his life, $1,000. He's done. He's on the beach. He's eating chili dogs. The large chart led the way. The large chart strength told him, hey, take this trade. Safia says, you know what? I've been paying attention in class. I've been watching this, and this really resonates with me. And she says the same thing. When everything says down, I'm willing to take the trade. The one thing that you didn't have here, Safia, is momentum. But you had that path clearing, right? You get to the bottom of everything. Everything's pointed down, and you're able to take advantage of it. Quick profits. And guys, do you see how I'm obligated to say it's not odds favorable momentum, right? The best of the best look is up here with that separation. But Safia recognizes the clear path. She recognizes everything's going, that it's coming from a good top, and she capitalizes. Nice job, Safia. And then Gary helped us out, guys. Crude oil rolled. So crude oil traders, the volume is on the new contract now. And that's where it's at. And then INSEA 58. So do you see how it all revolves back, guys? It starts with, hey, Mark, is this an entry? Well, let's talk about the rules. There's odds favorable, right? There's that area with the potential to break. It's coming from a good bottom. And it just didn't make it. Rule number 3 says that it wasn't met. Rule 3 was met perfectly here. It's a great chart read. It's awesome anticipation. And then as a brand new user, you find yourself waiting for the best of the best initially. And you may ultimately change that plan as you grow. All right, M. Breaking through the areas on the bottom. Once again, I love these trades, guys. Take a look at it. Let's do our chart reading. Everything is screaming down, right? We smash through support. It becomes resistance. All of my trigger lines are through the area, and that resistance is likely to hold, is what M is saying. Because of the rules of termination conditions, this area is likely to hold. Because it is, I'll take an entry at the area. And also because of the rules of termination conditions, he knows that 79.08 is a huge problem because the triggers aren't through. And he says, so I'll get paid when it retests it. Beautiful trade. Not at all a high probability trend trade. Look at the triggers below it. Look at the areas floating in the distance. But a chart read creates an awesome, successful trade. Nice job, Em. This would be considered an edge trade when everything goes down and it pulls back. It's not a trend trade, right? This is just a trade that uses the chart read, the basic recipe. If price retraces to resistance and all of the trigger lines are below, it has the potential to stop. Jose, it's not even a 50-50. Look at the momentum on his large chart, guys. Is it odds favorable? It's not odds favorable momentum, right? Because this is odds favorable momentum up here. This is weak, anything can happen triggers. So he doesn't have the advantage of momentum. He doesn't have the advantage of a clear path below him, because for a 50-50 to be a 50-50, those smalls have to look like this. Guys, that's a 50-50 trade. You know what this is? This is an awesome chart read where he took the first stab back to resistance in a market that's been screaming down. So he took a low risk entry and an intelligent profit take. Even his small chart has anything can happen triggers. So as an educator, what I would ask him is, how did you know it was going to be this one and not this one or this one, right? And he'll tell me, I just put my stop up behind the back one, but I didn't want to miss it. It's a great trade, guys. It's a great chart read. It's not a high probability read. Because divergence right from a fib with absolutely no triggers through, this says we could be putting in a bottom. He just sniped it. Exactly, Ron. Thank you for the word. That's the word I was looking for. It's the management on that that's amazing, guys. It's the management on that that sets this trade apart, that has him in the moment knowing exactly where his problems are through the chart read, so that he can manage this lower probability trade aggressively. And I think you did a perfect job on it. It's not my trade. I don't take that trade. Doesn't mean it's a bad trade. And then Gary says, everything says up, and the market pulls back. And Gary, great recognition on those strong triggers on the NASDAQ, those split triggers. It pulls right back to support with every trigger line above that area of support. So Gary says, you know what? I'll let it start heading the direction the large chart says it's going. He gets in and he gets out of the trouble spot. Gary, beautiful trade. NASDAQ users, have you heard me talk about don't fight the small triggers? You guys have all seen it, right? So Gary, I'm going to take your picture and I'm going to put it into the NASDAQ section. Don't fight smalls. And we're going to keep saying it until it resonates with everybody. NASDAQ is a little more advanced, guys. It moves fast. But it can be traded, and it has the same concepts. Odds favorable momentum, right? Hadn't reached the termination condition. He knew he was looking for an area. Look at the trigger lines. Let's take it back to the most basic lessons, guys, on trigger lines. What's odds favorable triggers? Favorable large triggers overlap, right? Because what it does, yeah, that's odds favorable. I used the wrong term, PFI. But favorable large triggers for entry overlap. They're one on top of the other. So once again, Gary has an area of support inside of a large trigger, and he has an area of support inside of a synthetic trigger. Look at the size of the window when they're split. This is why we say favorable large triggers in the beginning, letting them overlap, because that window is much smaller. Gary recognized divergence, strong small triggers, and he said if this one's going to go, it's going to go from the bottom of the window with all that momentum down. And look how the bottom of the window corresponds with Fibonacci support. Fibonacci support has every trigger line above it. He has odds favorable momentum, and he has a clear path. This is refining and taking that little patient entry. Nice job, Gary. Strong. Does that make sense, everybody? It doesn't look like a conventional high probability trend trade, but it's taken all of those concepts and capitalizing. And then, Safia, you're learning the market flow, so you took the trade, but you forgot to turn on your ATM. That's okay. So there's that divergence, right? There's that super strong trigger line. You wait for everything to roll, and you just take a momentum style trade right off the one-to-ones, textbook, and you take it off at the trouble spot. How do you feel about the trade? You like it? Entry's getting better. You know what I have to do, though, because this is a teaching room, right? Is at the time of your entry, every trigger line is below this area of resistance. So you are trading directly into a termination condition. You're trading into Fibonacci resistance, and you're not coming from a termination condition, which means that the market does have the potential to stop dead in its tracks right there and head down. But you have odds favorable momentum, and odds favorable momentum is hard to stop, right? And you cleared this huge area of support, and you have strong triggers, and you have no divergence, and you took a beautiful entry that even though we're trading into a red line, there's so much momentum coming from this one that you're able to take it up to that next key area. So from a learning standpoint, brand new users, not your trade. You're trading it into a red line. From a chart reader's standpoint, beautiful trade. Way to take advantages and turn them into profits. Great job. And guys, I'm going to try and do that with every chart from now on. We're going to go back to the 3 rules, but we're going to praise the advantages that resulted in profits. Mike M, termination, full reversal, 50-50, no divergence, perfect entry, stop keeps you safe, and you take it with all that momentum up to Fibonacci resistance. Beautiful trade. I don't even know what else to say about that. That's a beautiful trade. That's perfect. Ladies and gentlemen in the room, especially my new users, there's your termination condition at the bottom. That is the ES. This termination condition creates a full reversal. The full reversal gives me odds favorable momentum. There is Fibonacci resistance, but the smalls have smashed through and the large are coming up strong. It's a 50-50 trade. Mike says on a 50-50 trade, look how perfect it is. Tiny window of opportunity. There's one line inside of favorable large triggers. Not a gap theory, PFI. We'll address why not. Perfect entry support inside of favorable large triggers. He has strong triggers. He has no divergence. And guys, if you go back to the simple KISS plan, and I know that Mike is a little bit beyond it, but if you go back to the simple KISS plan, if you're following those most basic rules for a for a medium probability 50-50 trade, oh, that was RTY? I thought it was yes. Mike could check off yes on every one of these. So the same trade that Mike took, as an experienced chart reader, a brand new user can take and build that foundation and still make profits because it presented every opportunity. Nice job, Mike. Let me see where I'm at. I think I lost my spot. All right, coming back. All right, Safia. Small triggers inside the large. You're waiting for the small triggers to roll up and the area to clear. So Safia, could we call this a medium probability trade? I like this look. So right here, a termination condition, support, the market pushes up. So let's talk about it, right? I love talking about these charts. No worries. If you're unsure, waiting is always the best answer, isn't it? I'm not quite sure if this one fits my rules. I'm going to sit on my hands. Triggers are inside of the large triggers. So now you're incorporating more information to discern as you go through. So I'm going to take it as a very simple 2-chart process. I don't have odds favorable momentum, but I do have all of my triggers up. I do have a clear path because all of my triggers are above 46.50. So when this pullback happens, there's the bottom of my window, right? Right there at support, but the small triggers are really strong. I have a clear path. I have an area inside of favorable large triggers, so I've got 2 out of 3. You could have taken the trade with the understanding that that's your problem area. I'll get to it, Mike. I think that I haven't gotten to it yet. I saw that you had 2. I don't think I've gotten to your second one yet. And I'm not saying that you have to take this trade, Safia, but do you see how the path is clear, but the momentum's not? But there's your entry, and you can just wait for that little slowdown, and it gives you an opportunity. Because the large chart says we have the potential to go back up. Oh, you have 3? 2 are together? I got you, Mike. I will find you right now, my friend. Whoops, I went to yesterday. Hold on. On my way. All right. That was the first one. We talked about it. Absolutely beautiful. Scrolling down, scrolling down. And then Tim, I know that we talked about yours, right? Nope, we didn't. Everything set up and you took an entry. Mike, that was the first one in the mix. I don't think I've gotten to your next one yet. I believe you. Let me show you what it looks like on my end. Maybe the second chart didn't stick. But I don't have anything behind it. And that was your first one, I believe. Maybe it didn't stick to the chat box. Would you mind reposting it? To the left? I'll be darned. I've never seen that. Thank you. I just thought that was part of the other chart. Haha, I learned something today, guys. Next, thank you for that. I've never seen them, and I guess just because the charts were black, it was tough for me to see that there were 2 different charts. So thank you, yeah. I thought this was part of that. I really did. Thanks for that. I would have been lost forever. All right, and this is, once again, everything down. You're trading into Fibonacci support. You're in that sustained trend. So you're willing to take a shot at a mid-band right there at the 1-to-1s. Everything's below and divergence is printed from a termination. And you just grab hold of that sustained trend, that strong trending market, and you gave yourself an area to trade from. The only challenge that I see with this one, Mike, really, is that you were trading directly into Fibonacci support with weak triggers. So you took a calculated risk on the short. With every indicator pointing down, you said, you know what? I'm at least going to retest. I'm guessing is what you said in that sustained downtrend. And then when you come down and you reach these key areas, you get that third divergence, which is a great exit condition. Did I get that one about right? And then for the new users, yes, he did trade into a termination condition, but he made a decision based on his read. I love it. Sorry I missed that one. Now I'm going to have to start looking at those. So guys, if you do those, let me know. If I miss it, I'll know how to find it this time. All right, Tim, let's see what you did. Talk to me about your entry at 79.59. Did you get in on its way up? Or did you get in on its way down? I can't see your entry on the chart. You got in, so you got in right here, over here around 922. I just want to make sure that I'm reading it right because you have odds favorable momentum, right? Everything says up. The path is clear. The large chart said giddy up. Hmm. 79.41. No, you are definitely in at 59. I can see your entry price. 41 was the bottom of the push, right? It lined up with the 1-to-1s. But this will print at your entry price. Or did you get in all the way down here and then add on to it? Says that you got in right here, but your entry is showing up there, so there may be a challenge. Okay, so you got back in. This says 59. That shows 59. All right, so it may just be a timestamp issue or something. But this shows in 59. So you were going to get in, and I think 50 is your appropriate entry. That area of support, as it pulls back right there at those large triggers, there's your rule number 3. And then it does. It overruns it. They had other plans, and they push all the way back to these 1-to-1s, and they push all the way back right close to that Fibonacci support. Notice how your triggers never blink. So if you took this entry, when it comes down here, it's certainly an opportunity for a second chance. And maybe a close on the correct side of the smalls gets you in a little lower and gives you an opportunity to run back up to that next key area. Does that make sense? High probability trend trade happened somewhere right here. It didn't work out. But those rules of termination conditions suggest that this area is going to hold. These trigger lines suggest that it's going to hold. So maybe there's an opportunity for you to retest it down there. Nice job, Tim. It's a great large chart read for sure. All right, let me see where I'm at. And then Ron says odds favorable momentum. The path is clear. He jumps in, he jumps out. $200 base hit. Consistency, right? He has a plan based on his chart reading. Beautiful. PFI, I think we talked about this. Yeah, we talked about that one. It's tough to manage risk on that one if you just jump in. And then Gary, termination, lets his triggers roll. The momentum is down. And he hops in when things start to clear and hops out before he gets to trouble. 3 divergences in the same location coupled with the termination. Gary, great execution, taking advantage of momentum. Jose, 13.2 has weaker triggers. 5.1 has weaker triggers and divergence. And you're just counting on, and I like, Jose, I don't disagree with the trade. It's a medium probability trade. You have fully waived the right to momentum. But you do have a clear path. All of your trigger lines are above support. You do have an area of support inside of favorable large triggers, and you did put your stop where the market shouldn't go. So you made a calculated choice. I know that I don't have the momentum, but I'm willing to take the trade anyway because the market's trending up. It's going up. Everything says up. And the same thing happened 4 fibs before, and that's where they just finally ran out of steam. I don't disagree with the trade, and you get into it understanding that the momentum isn't there, and you put your stop where if it doesn't work, you live to fight another day. 8 ticks is beautiful for a futures trade. Nice job. It's great execution. It waived the right to momentum, and it just didn't work out, but I think that you did it as well as that trade could be taken. And then Gary jumping in on those momentum trades, doing it well too. Termination, it retests. And I love this look, Gary, that you let it retest that area of resistance. And then when everything starts staying down, you're showing great patience on your exits, Gary. You're showing amazing execution on your exits. And then, Tim, we talked about this one, right? And I think I like this one a lot because you don't know what to do, because right now your brain isn't saying the rules are met, right? So that's great. That's great that your brain couldn't come up with an entry because there really wasn't one. So great job on that. All right, Mike, here's number 3. I'm going to click to the side of it too. Anything can happen triggers, but the area begins to clear. You wait for everything to roll and take it. Man, nice. Smalls are still outside a little bit. They have the potential to break it. And guys, I want you to see this right here. He doesn't take the pullback because it's problematic. What he does is he waits for everything to clear that problem for all of his triggers to agree. And then he takes one of those little stab backs straight to Fibonacci support. Mike, awesome execution. Great chart read. And I appreciate you guys that are posting trades outside of the norm, because what it does is it reminds the new users that you are not a high probability trend trader forever, right? You're just going to find what works for you. Everything says down and the path is clear. And Safia says, give me that pullback where everything says down to an area that may hold. And Safia, beautiful profit taking where the market has the potential to stop. And it says it on every stinking chart. Way to not hold in hope. Way to get the most out of the trade. Tony, I think he said RTY. So chart reading, right? The momentum isn't there, but the path is clear. It hasn't reached fibs. Everything's clear. Every chart agrees. Even your large chart agrees. And I am in love with your exit. You and Gary both today, using that point where the market is likely to go and just taking profits and then sitting on your hands and waiting to see what happens. Outstanding trading, guys. Outstanding chart reads. How are we feeling about the day? We're almost through your pictures. We're going to get to that live market pretty soon. Abdul Aziz, nice to see you. I couldn't find anything wrong with this trade if I wanted to, Abdul. The momentum is strong. We talked about this one as it was happening in class, didn't we? The momentum is strong. The path is trying to clear, but those darn fibs printed mid-trade. You take the perfect entry, and you said, my job isn't to hope things break. My job is to get paid. And you do that. Perfect. Awesome execution. And guys, didn't he do this exactly like we talked about it in the room while it was happening live? The same chart read that I had, the same challenges that I saw, the same management plan that I said I would probably imply on it is exactly what he did. Look at his picture and look at the one that we marked up together as a class. Where did it go? 100% identical. We are in probably different time zones. He's definitely not standing behind me. But this is how that foundation creates a similarity between trades, because we're looking at the same advantages. And then we're all going to handle those advantages just a little bit different. Vittorio. Small triggers are favorable to long, and you don't see the problem. So Vittorio, absolutely. Are you with me in the room? In PFI, if your rules weren't met, rock star, dude. Great job. So Vittorio, do you understand that this is in fact a NASDAQ lesson and not an ES or a crude oil lesson? That's the first thing that we have to clarify. This is very much a NASDAQ lesson. This is for my NASDAQ traders. And the lesson stems from when everything says go, that area is beautiful when those small triggers aren't against the trade. But what I found in patterns on the NASDAQ is that even when everything is beautiful, If the small triggers are railing against that trade, it tends to push lower. Let me find a good example. If everything says go, if it's picture perfect, and Vittorio, we can agree that this is the best look we could ever hope for on a large chart, right? Odds favorable momentum, the path is clear, I'm even coming from a termination condition. I love this look. And my brain instantaneously says, let's take a long. On crude oil, I take this long. On the S&P, I take this long. But on the NASDAQ, stupid NASDAQ, if these small triggers are vertical against me at the time of the trade, I'm just sitting on my hands. I'm just waiting for a second to see, because I'm not going to fight those small triggers. Because remember, on the NASDAQ, your small triggers are the 13.2 triggers, right? It's a pretty big time frame. There's a lot of momentum there. So what I found, Vittorio, is that this little bit of patience right here keeps me from getting run over more often. And remember when I said I go through and I look at what works and what doesn't work? So when I started trading the NASDAQ, guys, what worked was the exact picture that Vittorio posted. When my small triggers are still a full bar away, getting in at the area worked beautifully because it gave me an opportunity to manage. And what didn't work is when those small triggers were cranking near me. So I used my spreadsheet, I used my pictures, I used my checklist. And the way you guys bounce ideas off of me, I bounce these same ideas off of John Novak. And what we did is we began this awesome study process. We started scrolling back and looking at the NASDAQ and how many times did perfect trend trades lose against small triggers? And what was the patience, right? What was the patience? Safia, you can do anything you want to do. How's that for an answer? You can do anything you want to do. But if you did it, does that make sense, Vittorio? So Safia, because of these strong triggers, are you willing to fight everything that says up? You are? Okay. Are you willing to go short against the trend? Are you willing to go short against the momentum? Are you willing to go short against support that has the potential to hold because your smaller chart, smallest momentum indicator says down? Sometimes, guys, just because it's not a trade up doesn't mean that it's a trade down. It's not even 50-50. You have a clear path. Down here, Safia, with this momentum instantly, it's still not really a 50-50. So with all the momentum, yeah, you could try it, but you have to manage it assertively, right? Because you're still at a little problem here. And if I'm not mistaken, this area ended up holding and the market ended up going up. It didn't have a clear path. And if I'm not mistaken, that this area did ultimately hold and it went up. So without the clear path, I think these momentum trades are less likely to be successful. And I think that if you go back and you study 20 or 30 of them, you'll find that that clear path definitely adds to the success rate. Vittorio, great question. I just wanted to make sure that we were okay that it was a NASDAQ lesson. Tony the Tiger, everything says down. You take a pullback to resistance. Is this NASDAQ? And then you take the close on the way down. And then you get out at the problem area. And this is the other side of the coin. Tony, are you in here? Is that if this roll of the triggers is so far away and you wait for the close, it's a tough one. But Tony, do you see how at the best spot up here that lines up with all these spots here, those small triggers, excuse me, were a full bar away? And because they were a full bar away, getting into that entry, it gives you room to get back to the trouble spot and then see how that reaction is going to happen. So that's kind of the same lesson. Is Vittorio's picture, when everything says go and those small triggers are so far away, it creates an opportunity to get into the area, and then you have that reaction time when it gets back to those small triggers that are up. because they're so far away. And it's the same idea of the gap theory that price likes to retrace back to those triggers. The same thing that gets us that great entry. Does that make sense? Awesome. NASDAQ's a different animal, guys. It takes a little bit to get comfortable with it. And I didn't follow my brother's advice. I tried it on my Apex account, and I blew out my Apex account about 4 times trying to learn to trade the NASDAQ. Awesome, Mike. And that's great personal recognition, right? If the NASDAQ seems chaotic to you and you think you can do the exact same plan on a slower, easier chart, why wouldn't you, right? And I've gone the opposite direction, as I've pretty much gone full NASDAQ. I don't even open crude oil or ES anymore. I'm trading what suits me. And after the study that I've done, NASDAQ's great for me. It's not for everybody. In Saya, what was the question? What do I do here? Is that what you asked? What to do here? In Saya, I'm going to respectfully ask you to do something for me every time you post in the room. I want you to take your picture and I want you to start going through the rules and just typing them out, and always starting with them at odds favorable momentum. So let's go through it. And this is where we're talking, right? Do we have strong triggers? Why is this not typing in? There we go. And what you'll find is that if we do this together, and you do this every time, you're going to go from asking, what do I do, to were my rules met? So are the small triggers below the large triggers? Are the large triggers wide? And are they angled in the direction of the trend? I'm going to let you help me annotate this chart. Guys, everybody in class can help. But do we have that odds favorable momentum? I'm going to say absolutely. Perfect. And now we have to go to the next question. No termination conditions. This is the second piece of the puzzle, right, for the new user? So what do we see? We see large triggers are way up here, and my small triggers are breaking through, right? So what we do is we say to ourselves, this is one of those 50-50 looks that Mark talks about. This is one of those, it has the potential to break, especially because it's coming from that great top that you pointed out. It has the potential to break, but it hasn't broken yet. So it's a 50-50 look. Are you with me so far? All we're doing is we're analyzing the large chart, and we're saying to ourselves, is it creating enough advantages to look entry? I'm creating a window of opportunity from my lowest point of resistance to the highest point of resistance inside of favorable large triggers. So if you were going to take an entry, and it's a medium probability entry because the area hasn't broken yet, that's your best case scenario right there. But because the area hasn't broken yet, you have to identify your potential trouble spots, and you have to be willing to accept that this may not be a home run trade, that you may have to manage it assertively. And if another divergence prints, right, or when price reaches that first trouble spot, maybe we take a minute and we get to quick profits and we go to break even. Does that make sense? So the process never changes. It always begins on the large chart, looking for advantages. And if I feel there's enough advantages present on the large chart, I'll look for an entry. And if something's a little sketchy over here, like a 50-50, I'm going to make sure that it's a low risk entry. I'm going to make sure that I manage that trade aggressively. Does that help? And the goal is always, we write on the charts because the goal is always to go from was there a trade to were my rules met? And if my rules were met, well, then I want to take that trade. And if my rules weren't met, then I'm not taking it. But I'll still take the picture and I'll still talk about advantages, because eventually this one may find its way into my rules. Great chart, great question. I hope that helped a little bit. And it's a process. You're going to get better every day, guys. 50-50 trade. Smalls are through, large are not. No divergence, perfect entry. Profits at the trouble spot. Nice trade, Paul. Does everybody see it? 2 charts, right? Smalls below the large and smalls through the area, so he looks for a pullback to the area inside. He knows this is a trouble spot because the area hasn't broken yet. He takes quick profits, and he can't lose anything on the trade. Perfect. We start at the large chart and then work our way down to the small chart to refine an entry if the advantages are present. Gary sure thought they were. He took the exact same trade. Perfect management. Nice job, Gary. You're crushing it today. You're consistent. I love it. All right, Alan, momentum trade. Thought this might be a breakout below the support, but after taking the trade, you realize the 13 trigger look is all wrong for momentum style breakout trade. This was me trading my expectations, not my rules, sim only. And I think that's a fair assessment. And guys, this happens a little bit when you begin to add trades. You're looking for the momentum, right? But it's really not there, so it becomes difficult to justify the momentum trade. And what it really is, and Alan recognized this after the fact, is that he wanted to trade the breakout, but the breakout never happened because the triggers didn't get through. And this is the perfect way to build a plan. List of advantages. Clear path? No. Odds favorable? No. Area for entry inside of small triggers? No. So Alan's able to recognize maybe I shouldn't have done anything here. And Safia, this goes back to your awesome picture where we talked about how that clear path can really help a lot, right? And then Alan, you may have had one of those trades right here where you circled it, where that momentum is cranking. Great picture. Guys, mistakes are the foundation for growth. Always put them in there. And then skip the 50-50 because divergence still... All right. So you chose not to take it because of the 50-50, right? And that's cool. I like it. And then, Alan, this is one of those instances. Look at how far through the area the small triggers are, right? And these are still strong. And I don't disagree with you for not taking it because the bottom of your window is here. The top of your window is all the way up here. And you're literally looking at 20 ticks of risk on a medium probability trade that isn't coming from a termination condition. And I think sitting on your hands on this one is great. PFI, have an awesome weekend. Go to the gym, lift heavy. Great week this week. Great questions, great pictures. We're going to do it again next week, man. So go relax for a while. Enjoy it. And then, Alan, it looks like later on, you crank out that momentum. You don't need my permission. Ever since the divorce, PFI, I have no say in your life. I don't give permission. I also don't deny. You do whatever you want to do. Alan, everything is strong. Everything is down. Everything has cleared the problems. You jump in, you jump out. You didn't get greedy. Is it a high probability trend trade? No. Is it a great chart read with a wonderful result? Absolutely. Tim, have a great weekend, man. Thank you for posting in the room. Let's keep doing that every day. Let's keep talking about advantages and let's keep growing, man. Enjoy your weekend. I appreciate you being here today and this week. Alan, how do you feel about the trade? You like it? With that much momentum, was it nerve-wracking or was it pretty calm? I think it's a great looking trade. It's not my trade. I suck at this trade. When I try this trade, it is a guarantee that it's going to retrace. So guys, if we ever take this trade at the same time, man, it's tight. I get blown out every time on that one. I don't know why. I don't have any idea why I struggle with it, but I do. So I don't take it. It's not a part of my plan. All right, Paul, termination creates a full reversal. They come back and retest. Everything suggests up. The market is flying. And you're waiting at a mid-band with divergence, and it just didn't get you. Happens sometimes, right? But you knew exactly what you wanted. You knew where you were willing to take the trade, and you knew where you weren't willing to take the trade. And then the only thing left to do is be okay with the result because it fit your rules. Jose, 50-50, no divergence, perfect entry, awesome management. Oh, and NT crashed and you couldn't. Jose, isn't this one easier? I feel like it is. I feel like this is probably the easiest way to take a 50-50, guys. From a good top, with no divergence, and taking it right at that area that gives you the least amount of risk, and then managing out at the trouble spots. Great execution, Jose. That was your medium probability winner, giving it back to you on the medium probability that didn't work earlier. That's the balance of the market, right? And then, Paul, it's been a tough week, so you're feeling a little anxious. I think you did this perfectly. It gave you your entry. You took quick profits. 3 divergences can end a trade. Net $10. How did you net $10 on that? Oh, for the day, not on that trade. That's okay, right? Net $10 isn't minus 200 or 160. And guys, it's going to be that balance out. And Jose, I think that that's a great. Thank you for saying that. Sometimes it's not the high probability trend trade that you take that's the reason that you're positive on the day. Sometimes it's not the medium probability trend trade that you take why you're positive. Sometimes it's the rules broken trade that you avoid, right? It's the rules broken trade that you don't take. It's the advantages are gone trade that you don't take that lets the profits from these great trades run. And Jose, I'm not suggesting your first trade wasn't great, but your first trade was lacking that advantage of momentum, right? This trade was a picture perfect from the book, medium probability trade with awesome management. So for the newer users, that little adherence helps a lot. And then, Paul, when you have a bad run, when you make some mistakes, it's going to shake your confidence, right? So this is pretty normal. Has anyone ever felt that? You ever make a couple mistakes in a row and you're like, oh man, am I doing this right? Now I'm second guessing everything. I've done it. Hell, I probably did it the other day. And that's cool because what do you do when you feel anxious? What do you do when you go sideways? Just kind of regroup, right? Go back to what you know works. Go back to what you know works until that confident feeling comes back and then start going again. Always have that fallback. For me, my fallback when I shake my confidence, guys, is that KISS plan. This is my, all right, I'm starting to trade what I read more than my rules. I've got to realign. I've got to get my stars back in place so that I can get back to consistency. So I can get back to winning more than I'm losing. And so I feel better about what I'm doing. And Paul, I appreciate that you would write that on the chart because there's so many people that think that they're the only person that get that, right? Every time we have a challenge, we believe we're the only person that has that challenge, but we're not. You're not. You're not alone in this. Everybody in this room has made mistakes. Probably everybody in this room has blown out accounts. Everybody in this room has hidden losers and only shown winners. I've done it. I did it in John Novak's class all the time because I was embarrassed that I couldn't be perfect at something from the get-go. Jose, there's your 50-50 trade. Remember we said areas had the potential to break? And there's those divergences from the KISS plan that keep you out of trying it again. And that market rockets up. And now we don't know what's going to happen, right? We're in an uptrend. Well, there's a downtrend as the triggers try to dance, but we're directly in determination conditions. Is it going to continue down, or is it going to reverse the market and go up? Nobody knows for sure. Nobody knows for sure in the moment, guys. I don't have any idea, and I've been reading charts forever. And this is why I say don't form opinions about the market. What's happening in the moment, right? Don't form an opinion about what you think is going to happen. Be in the moment for what your indicators say is going to happen. And what my indicators say is going to happen is that, Mark, you don't have any idea if this is going to break. And Mark, you don't have any idea if it's going to go up. And Mark, you don't have any idea if it's going to go sideways and dance around this fib for the next 3 hours. So guys, in this room, I'm never going to say it's going to go up from here. And I'm never going to say it's going to go down from here. And I'm never going to say it's going to break out of here. But we'll talk about what the indicators say and what the potentials say. And I'm going to encourage you guys to take that same thing. And you'll notice it in this room. When people go, hey, go short. When people say, hey, take that long, they're corrected instantly. Please don't ever do that. We don't call trades in the room. We can say that the trend is up, right? And we can say if the uptrend reverses, then we can look for opportunities, right? But guys, don't call your trades. Don't pick your shots. Say, my indicators say that I've lost momentum. My indicators say that I've lost momentum 3 times. My indicators say that because of this momentum and this push down, it's likely to touch the mid-band and support. My indicators also say that there is the potential for the market to pull back to these large triggers because they're a full bar away. And there's just potential, right? And I think I have a 13-2 chart. No, I don't. This is my right chart. So guys, what do your indicators say now? Your indicators say that we're at a termination condition. My indicators say that my large charts are a full bar away. My indicators say that it's from a bad top. So my pattern recognition says that if patterns repeat themselves, this market may pull all the way to these large triggers and make a decision about going to 14,733.57, finishing the move to the fib. But it's never a guarantee. Does that make sense, everybody? It's never a guarantee. This market can go down for the next 3 days and never stop, which is why I don't form the opinion that that gap theory is an absolute. And look, it wasn't. And it made it to the second level, and now we're at a termination condition. Hopefully you didn't go long at the first level against momentum and against the trend, right? Back to that simple idea to keep you safe. And now the smalls are trying to break through, but they really haven't. They're just areas. This is why we say let them smash. Some of you are looking for a 50-50 trade saying, but look, Mark, they're through. Let them get through, right? Now they're through. Now it's 50-50. It's from a bad top. Now it's even better. How do we feel about a potential sell from the bottom of resistance right there where the triggers are through, the path is clear, and it's the bottom of the window on this potential NASDAQ trade? My small triggers are down. I'm not calling the trade. I'm talking about the rules. I have odds favorable. My triggers are starting to break, but they haven't broken completely. It's a 50-50 look. My window of opportunity is easy to define in the event of a pullback. It's going to go from my lowest point of resistance to my highest point of resistance inside of favorable large triggers. But there are zero guarantees in the world that this area is in fact going to break. And the likelihood of this trade being victorious goes down a little more because it's from a bad top. It goes down a little more because there's divergence. I'm breaking all of the rules from the KISS plan right now. But with this much momentum, it might give me an opportunity to manage. There's those strong triggers up and strong. And look, guys, it took me right out of the trade. It didn't fit the rules for the KISS plan. Does it mean that it's not your trade? No, but it means that you now have a basis for what the best look is. And from that basis, you can make a decision. And guys, look at the strong triggers. Vittorio, do you see it? Sofia, Gary, who else is trading NASDAQ? Do you see how those strong triggers said, dude, just wait. Wait a minute. And this is why I started taking these pictures, guys. This is the pattern that I recognized that now saves my bacon. So I'll go through the process again. 50-50. This is a 50-50 trade, and let's go through it. From a bad top, momentum is great, but path isn't clear. This is what I'm seeing. I know that divergence hurts, but if I'm still willing to take the trade, right here, small triggers up against strong, be patient on your entry, right? Be patient on your entry. There's no reason to fight them. And I want you guys to recognize this right here. And this is what I had to do. This is how this turned into such a cool little advantage for me. Is it wasn't the strong triggers that I recognized. It was that bounce off of them. It was that bounce off of the small triggers. And it kept happening on these trades. So I started taking this picture. Let me put it back down to normal. This is how plans are built. And I started recognizing these conditions, and this was the one condition that I could identify and isolate that helped me with these advantages, right? That helped me get to where I needed to be. So I'm going to take this picture, and I'm going to drop it into my spreadsheet, and I'm going to put it under NASDAQ, and this will be like the 5th or 6th entry that says don't fight smalls. So it already violated the KISS plan. But if I was going to take it anyway, maybe that's my safeguard, right? I'll just call it don't fight because that's going to get redundant. Does that make sense to my NASDAQ traders? All right, Dr. P, let's see what you got. And Safia, you said it stopped you out. Any way to get rid of these indicator labels? I don't know of any way to do it, Dr. P. I don't have an answer for you, but I'm going to copy paste your image into a Skype chat with John and see if he knows. Because if anyone would, it would be him. So I just dropped it in there. We'll see what the answer is. Do you find them distracting? I've never noticed them. But I can see that, how it might be. You have them too? Are mine up there? Yeah, mine are up there too. Let's see. That's your data box. Historical, reload, templates. Let's go to properties. Grid lines, window, global HOS price, show chart trader, show scroll bar. Let's see if, nope, that's the scroll bar at the bottom. That's the toolbar up top. That's your fonts. Yeah, I'm not sure. The label properties to a 1. Let's look at it one more time from properties. Access horizontal window, display update intervals. Let's try this. Label font. Let me turn it to a 1 point right there. And let's click apply and see what happens. Oh, there you go. I'm telling you, Dr. P, you are my tech savvy guy. So NT8, is it? Let me open up NT8. Let's see. Right now, my NinjaTrader 8 is closed. So let me, I'll pull it up and we'll take a look. And while that's loading up, but it works on 7. That does it on 7. We'll take a look at Gary's chart while my NinjaTrader 8 loads up. Termination condition with 2 divergences. It is a mid-band at support. So Gary, what we have here is we hadn't reached the termination yet, right? So at this pullback, we're getting above these areas and we haven't reached that area. This is a 50-50 trade at the tail end of momentum. And notice how that 2 divergences, no, you're great. See how those 2 divergences take out the previous pivot right at support inside of favorable large triggers? That's the Pineski. That's a great looking entry if you're going to take it. These 2 divergences build just a little bit of patience to wait for the bottom of the window with everything going up. And then those 1-to-1s become an awesome target. No worries. So let's start on the large chart. Large chart, all of your triggers are above 72, right? And they're 99% above 72, 75. The smalls are at the tail end of momentum, but you haven't reached the 1-to-1 yet. So what do we have? We have a 50-50 trade on this one area. Does that make sense? Let's always start large chart. And then the first divergence takes you to a great entry. Oh, thank you, Dr. P. John to the rescue. So there's your first entry. Right here? It is. It's momentum. You're the tail end of momentum, right? They're working their way back to the large, but they haven't worked their way inside. It's not the best momentum look. And then it gets worse, doesn't it? But look where it pulls back to. It pulls back to right to the fib with every trigger above it, right there inside of the triggers. And these 2 divergences result in a pivot stop out below it. It doesn't have to be your trade, right, Gary? Because there's a lot of challenges going on with it. And to not take this trade isn't a bad decision. It's a decision that works for your brain, that makes you feel good about it. And it looks like your decisions are yielding awesome results right now. So if this isn't a trade that you're comfortable with, great job not taking it. But the 1-to-1s become the target, not yet a termination condition because price didn't reach it. And it's that simple formula. Price reaches the area, then it has the potential to be a termination. Until price reaches the area, it's a potential target. So if you chose to take the trade, it just becomes a potential target. And guys, remember, this class isn't just for trading questions. Dr. P had an awesome trade or an awesome indicator or setup question, right? I didn't know the answer for it. First thing I did is reached out to someone smarter than me. And it worked out great. So here's that NASDAQ. 50-50 trade, no divergence. Who were we talking about those trigger lines with? Whoops. Can we take a picture of it? Let's talk about NASDAQ one more time, guys. It's a 50-50 trade. There's no divergence. There's strong triggers. This is my window of opportunity. Is everybody comfortable with that? And then Vittorio, this kind of went back to it. Tony, this is one that you'll recognize in the moment. Do you see how there was a room for a full bar to get back to those small triggers? This is a NASDAQ pattern. So for me, because there's room to get back to those triggers, I've got room to manage it, right? John. So you take your perfect entry, your risk is minimal. If you're a NASDAQ trader, this either has to be the point where you take a couple bucks to pay for your commissions, or you understand that if it acts as resistance like it does here and so often, then if you're going to take this trade after it bounces off the smalls, the advantage kind of comes back at that close right there on the correct side of the small triggers. So these small triggers give you that little patience piece. If you take the first one because they're so far away, they kind of let you know, hey, Tony, hey, John, hey, Safia, I'm going to act as resistance right here. And if I do, don't sit and hope, right? It becomes a management opportunity. And then if you really want to take the trade, there's a beautiful entry with a close. And then this divergence on a 50-50 says you're losing your advantages, and that becomes your next management opportunity. Does that make sense, everybody? There's your NASDAQ, right? Coming at it. So I hope that's helpful for you guys getting into the NASDAQ side of things. Paul, the smalls are riding the large. Divergence prints, the path is clear. You take the entry. 2 points risk at the mid-band. And target hit. Clear path, right? Clear path goes a long way. All the triggers above goes a long way. I love it. Great trading, guys. Taking your chart reading and turning it into a plan that works for you. And then John. So Gary, and yeah, John said it, you're going to see momentum everywhere, right? And a lot of you guys are going to see momentum where none is present. Safia, do you want to post the picture that you got run over on? I know that you said that it stopped you out. You want to post the picture? We can talk about it? Or did we get that lesson in there from just talking about it? I believe these small triggers will save you more than they won't, guys. It's a bad top and it pushes all the way to support. And then the large triggers are a full bar away and it retests those triggers, right? No, that's okay. It happens. But I think we got the lesson in there. That if you were going to take that trade, the small triggers might have, yeah, bring it to me. That's what we do, right? And then Paul, you got your first profit target. It's okay. They don't have to be the best trade. As long as you know why you did what you did, right? There's one of those pivot stop outs on crude oil. That termination condition alone should have been enough to keep you out of this one, right? Guys, you're all going to take trades that aren't the best trades, and you're all going to take trades that break your rules, and you're all going to take trades, like John said, they're crappy trades that you wish you could take back, but you can't, so you learn from them. Whew, Safia, your chart count keeps growing. I love it. Well, I like it when you talk about it first through annotation of the chart, right? I'll do it though. There you go. What do you suppose was the largest contributing factor to the failure of that trade? Anybody help me out with this one? What are we looking at right here on the screen? Price reaches support and the trigger lines don't break. And then Safia, it becomes a little more problematic because we're not coming from a good top, right? So you don't even have that giddy up coming from a termination that creates a full reversal. And then if we want to expand on it a little bit more, and this is when you get caught staring at your small chart. My brother scolded me for that yesterday. I did the exact same thing. But Safia, do you notice how the large triggers are a full bar away? So not only do we have a rock star termination condition, we also have the gap theory in effect. Does that make sense? John, you did it too, trying to be the first one in. And it happens, and you're going to do it because you're so stinking good at reading charts that you're like, look at that turn and look at that momentum and look at that area right there, right? And you're like, heck yeah. And you didn't hope. You used those small triggers turning against you. What a great exit. So Safia, while it was a little bit of a challenge because of the conditions that you fought, your entry was so great and your management was so spot on that you took a problematic scenario and turned it into money. So I don't want trading in determination condition to be the whole focus because, yeah, you definitely did. And you definitely fought the gap theory. But your entry was so stinking good that you dodged a bullet. John, you're saying that you try to predict rather than wait for what the indicators are telling you and it creates problems? We talked about that one earlier, right, guys? Convincing yourself that the market's going to do something that the indicators don't say yet. I do it. Everybody does it. And it happens. And gosh, and the cool thing is that it happens to everybody and you're not alone. And we all make reading mistakes, maybe because we focus on the small chart. And then I'm going to share this picture real quick. Trigs are below the fibs. Stop staring at the small chart, you stooge. This is the feedback that I get. Guys, this is the feedback that I get on my charts when I send them to John Novak. You know better than this, silly. Don't do it. And it's fun because he's my brother, right? But you see how I messed the read up? Does everybody see how all of the triggers are below, how it's a termination condition? And I formed an opinion because my small chart looked beautiful. Safia, you're not alone. Yeah, it was good for everybody. You're going to make mistakes, right? The key is to identify those mistakes and then to learn from them. But we make them every day. We're all human. Terminations textbook. Gary, great job. Perfect termination condition picture. And there's an old picture from the user guide. Pivot not from an area. Mid bands hold. Entry on the pullback to the small triggers when we're anticipating the gap theory. For you guys trying to trade a gap theory, that's your safest entry, right? That's the one. Still not guaranteed. You're in a downtrend and the triggers are down. But that's your most conservative approach to it. I like that picture. I personally don't care trading into large triggers against me, but my rules aren't your rules. Your rules aren't his rules, and her rules aren't their rules, right? They got to be your comfort level. Great pictures today, guys. Awesome pictures today. What's the market doing? We came from a termination. The momentum is odds favorable. A lot of you are waiting for those small triggers just to break through that area, just to give you an indication that 80-17 area really does have the potential to break, right? If these small triggers get above this area, then I know I'm in a 50-50 scenario. Then I'll look for the perfect entry on my smaller, faster chart. Now they're starting to break. If you're a 50-50 trader, you already know where your area of support inside is. Whoops. But it just went to that second fib. And now I'm in a holding pattern again. So Safia, if we can eliminate that one mistake, right? If we can eliminate that one challenge that we're having, it's going to make all those other brilliant trades, you're going to get to keep that money. There's that termination, right? Gap theory, retest. Every chart agrees. Some of you take this one, some of you don't. But not a termination, second lower divergence, everything rolls, crazy momentum. It hasn't quite cleared. But that's the area we anticipate to hold if it's going to hold, right? And there's that conservative look at it. And you have to think about the next lines when you have two lower divergence. And then Gary's saying, I'm going to give it a shot if it sets up. Gary, your highest point of support is all the way up here at 12. Your next highest area of support is 08. Your lowest point of support is 04 at the midband. Just making sure we can identify the areas inside. And then Safia. Beautiful. Absolutely beautiful. Every chart agrees. It's coming from a termination. And holy smokes, it works out wonderfully. Nice job. It was 50-50, wasn't it? Not bad. Oh, Sophie, you're killing me. It is. It's a 50-50 from a good top. So you say one divergence? Ugh, who cares? I'm taking it at the area. Giddy up. Guys, it's not. It is not by the book on the simple plan. But it's so many advantages that there's no way she's going to miss that trade. The divergence printed, and you're going to wait for something else? No. Okay. Me too. I'll tell you right now, chili dogs are not as much fun on gluten-free buns. $50-50 at the areas, 3 divergences. Hold the phone, right? I know, Ron, I'm with you. And it was 100% perfectly the same every time. No idiot would take the other side of your trade, so you have to get the 80% perfect look that has great odds. It's a game it's like golf, right? How close can you be when you miss? Golf is way harder than trading. But the idea is the same, guys. The process gets you there, right? It's not a matter of home runs. Do we have a lot of golfers in the room? This drove my brother nuts. So the other day I played a course and I didn't use anything bigger than a 7-iron. So my furthest shot in the whole day was 174 yards. That's it. 174 yards was the longest shot that I ever took. And I shot 90. I almost got into the 80s with that approach. Because I was focusing on small, simple, consistent, repeatable shots rather than trying to hit the home run every time, rather than swinging for the fences, right? So it was a cool lesson for me. Get LASIK, K-Dog. 3 to 4 charts on a small laptop screen. Oh, who showed me the picture earlier? I would probably take an approach like this. K-Dog, me personally, I'm 51. I've had LASIK, but that would stress me out. That's a lot of information. So what I do, even when I'm trading on these 32-inch monitors, is I look at my 2 primary charts. I have 2 charts on my monitor. I have my large chart and my small chart. I will have a range chart off to the side on a different monitor, and when it's almost time to take the trade, I'll uncover it. And that works for me. They also sell these things. where you can put, and I'm not endorsing this, but you can drop these bad boys right on your laptop, and they're super small and compact. And you can stretch out a little bit, right? Get some leg room. So I know that's an option, something like that. And it looks like you can do just one. I don't know who any of these people are, but there's one just running off. Looks like it uses a USB to power it up. So if that little bit of extra space, so if that little bit of extra space will work out for you, and you don't need a ton, that's great. I hook my laptop into 32-inch monitors at the house, and then when I'm traveling, I travel with the monitors. I just bring them with me. So maybe that helps. Termination for the win. There's the momentum trade after the termination, and it takes you right to the next termination, at which point you sit on your hands and wait for a clear path. Bad top, straight to support. Does everybody see the gap theory in effect? Large triggers are above everything. Large triggers are a full bar away. Momentum says down. Direction says down. Terminations say wait, and you're below everything. So there's two possible scenarios. Either the market continues up because it's a bad top directly into all these termination conditions, or the area breaks, at which point we'll look for rules met shorts. Does that make sense? Insaya, does that make sense? Jude, does that make sense? And I got to say it at least once. Johnny Rocket, you with me? Love that name. Jared, we cool with it? Stock Chip? Everything is in the moment. We're gauging advantages in the moment. We're gauging what I see right now, and does it give me a statistical advantage to enter the market? And right now, the answer is a resounding no for my plan. I can't go short into support that may hold, and I can't go long against trend and momentum because my plan says, don't do it. This is how you typically lose. So I'm sitting on my hands if I'm watching the ES. On crude oil, my plan says don't trade into termination conditions, and I'm sitting on my hands. And on the NASDAQ, no worries. So keep it simple at first, Jude, right? Just stay on that large chart. But on NASDAQ, I've got terminations below and I've got terminations above. And look how the market on the smaller chart is ricocheting between these areas. So I'm playing the game of if then. If it breaks above, I'm going to look for a high probability trend trade long that comes from a termination that reverses the market. And if resistance holds and everything goes down, I mess with my stuff. Somewhere around here, I'm going to look for a high probability trend trade short. But until I get there, I've got to get my font back. Hold on. We did this for... we did this for Dr. P. I kind of miss him. There we go. Now I can see him again. I'll be looking for something down here. I'll be looking for something below if it breaks. I'll be looking for something above if it doesn't. But in the moment, I'm waiting. I'm being patient. I'm waiting for my charts to agree. I'm waiting for my chart read to tell me that it's time to look for a trade. Novak is going short first. Sikorsky is. Some people go short at this fib because the large triggers are all the way down here, and they just ride the wave all the way to close the gap. And then, yeah, Jude, that's great, that list. So thank goodness we didn't go long. And now everything says down. And for John, that's a top. termination. That's a momentum style trade for the short. It's a little outside of what Nexgen teaches by the book, but for John Novak's plan, that's an awesome opportunity to take advantage of resistance that held, triggers that rolled. I like the trade. And he knew where the management potential was, and if he didn't need to manage it, well, he probably just got paid at the fib below. And now we go back to waiting. And that's the hard part, doing absolutely nothing when there's nothing to do. S&P has odds favorable momentum. S&P has a 50-50 look.
Order pending.
My window of opportunity is from my lowest point of resistance to my highest point of resistance inside of favorable large triggers, which means that if this 50-50 style trade is going to work, it's most likely to work from that area right there. And John says if you added an additional chart, it helped you make a decision on that momentum trade. John, will you show me the chart that helped you make the decision on that momentum trade? What was that bigger time frame looking at? Because I think a lot of people have these charts, but they don't know how to read them yet. They don't know how to look for that information. I didn't have a 55 chart. I'd love to see it. Or Safia, will you post your 55 chart? I bet it had odds favorable momentum. And I bet that Fibonacci area lined up with an area that was likely to hold based on the larger chart, which meant that momentum entry was just following a trend. Does everybody see it? Smalls below, large above, 50-50. No divergence. Small window of opportunity, but I'm not coming from a good top. Not coming from a termination condition that created a full reversal, which means that if I'm following the KISS plan, this isn't my trade. Because this isn't the one that creates the best chance for success. But because of the momentum, the direction, maybe I'm willing to put a little bit of risk on a 50-50 trade. It's something that you have to decide for yourself. Thank you, Safia. And that was John's chart. Why did John take that momentum trade? Because he had a good top with odds favorable on a higher time frame that supported more down and didn't counter the idea of more up. 50-50, medium probability. If it works, Fibonacci targets in the distance. First trouble spot, maybe right down here at these 1-to-1s. And if it blows past my window of opportunity, I have 1.5 points risk on this medium probability trade. I know that it may not win, right? Because it's a bad top. And I know that it has challenges because I have 1, 2, 3 areas that aren't broken. So this one didn't fit because it's the S&P, John. Because it's the S&P, and if it's really going to go, it's going to go from somewhere in this window. And I can minimize my risk on a medium probability trade. But because it's not coming from a termination that creates a full reversal, because it's not from a good top, because everything blew by there so much, for the KISS plan, it doesn't fit my rules. From a chart reading standpoint, I have a lot of advantages, but I can recognize the challenges. 1, 2, 3 areas that haven't broken. So I may make the choice to break my rule, right? I may say I have enough advantages to break my rule, but I can't be surprised when the rules that were designed to keep me safe would have kept me out of a loser. And this is why we keep it, because a new user takes a loser and it hurts his feelings, and a new user takes a loser and they start to question things. So if you follow a plan that is designed to keep you safe more often than it's not, you can avoid that little feeling of discouragement, right? That little feeling of, I thought I had this, but it turns out that I didn't. This one didn't fit my rules. And this is one of the ones that messes up new users the most. And then Gary, 50-50 from a bad top, perfect entry. It got you. That's okay, right? But guys, give me a Y in the room if you're starting to understand that this idea of simplicity builds recognition, and this recognition is going to change your plan over time, you're going to adjust to a point to where you start making decisions on other charts and say, I'll take that weird trade because this is working, right? Or you'll say, because this is from a bad top, this just really isn't my trade. And you'll stay out of it. And you'll say, I don't need that trade to be successful because there's too many other opportunities that are going to provide me success. So this was a great example, guys. How to take it if you're going to take it. Notice that it revolves around the entry. Gary and I had the exact same entry. Or wait for market flow confirmation. Did you ever get it? I wasn't sure. No, never was market flow confirmation. Didn't the small chart look beautiful? But didn't the large chart suggest that this might not be your best chance of success? And then you get to make the decision whether or not that's your trade, whether or not that is your best chance of success, whether or not that fits your pain tolerances. In my own personal trading, it doesn't. But there's a handful of you that love this trade and take it, and they find a lot of success with it. I'm willing to skip it because I have a conservative approach to my trading. So, guys, that's it. It's Friday, right? John Novak put that list in the room. I'm going to put it in one more time because I want you guys, this is great weekend stuff to do. Where did it go? I lost the video list. There it is. Guys, here's your video watch list. This is great for you guys. And this is going to cover one of, I think, the best lessons for new users. This is John Novak running you through tops and bottoms. You added some? All right. He's going to keep you busy. The one that I just put is John Novak discussing tops and bottoms. Look at all these. 1, 2, 3, talking about tops and bottoms. 4 is talking about tops and bottoms. And then adding in trigger line specifics. Helping you guys working on your foundation. Helping you guys looking for the absolute best of the best. And then these Mark Douglas videos talk about the psychology of trading, which is huge. Trusting the advantages that your software provides. And then I'm going to download. Whoa, look at all these videos. Sorry, guys. Date night is canceled. And I'm just going to replace the one that I have so that I can be current. It's a lot of information, right? So if you go through these videos and you have a question about what you saw, bring it to the classroom. Take a picture at that point in the video and say, hey, Mark, can we talk about this for clarity? Can we talk about this? I want to make sure that I understand it. I love John Novak. He's a great dancer. But before I accept everything he says is the gospel truth, let's get a little clarity, right? Yeah, George T., sorry. No Tennessee whiskey for you this weekend, my friend. I'm ready to go back to Gatlinburg. I'll tell you what, there's a golf course there that I need to take some revenge on. And then, Gary, there's that 50-50, right? 50-50, no divergence, right to the area, small triggers a full bar away. That hits all the rules for me for a 50-50 trade. And the first video is a how-to. 1 minute and 23 seconds to place entries and move stop. Nothing's changed. Awesome. Thank you, John. Great stuff this week, guys. A lot of awesome lessons. A lot of great participation from you guys, and I appreciate that. When these 50-50 break, they have the potential to get to that next area. Never guaranteed. Oh, you guys have a Buc-ee's? Being from Texas, I can tell you, Buc-ee's is amazing. Buc-ee's is the best bathroom you will ever stop at a road trip. And the food is amazing. And everybody's friendly. It's like a Walmart that doesn't sell lawnmowers, but it's a gas station. And that's what they prided themselves on, as they started in Texas as the place for people to stop that weren't the typical nasty bathrooms. Yeah, you know you're a hillbilly when you can say that. Buc-ee's are legendary in Texas. And they've started expanding out. And I'll tell you what, if I know there's a Buc-ee's 50 miles up the road and I have to pee, I'll hold it for 50 miles. George T. Guys, is there anything else we can talk about before we call it a week? I think it's a great week. I think everybody's building their foundation, and you're going to develop your plan based on it. If you create a trading plan, if you create a set of rules that you're comfortable with, that you like, and you want a little feedback on it, you can always email it to me. If you develop a plan or you're working on a management plan, you need a little help, you're always welcome to email it to me, guys. I'll give you feedback. And remember that feedback doesn't always feel good. I want to say that right now. Feedback doesn't always feel good, guys. Sometimes it hurts our feelings to hear that we made a mistake, and that's okay. We're all going to work through it, and then we're going to move forward, right? So if I ever hurt your feelings, I apologize. It's done in the interest of making you a better trader. And that's my job. That's my goal. So thank you, everybody, for being here this week. Thank you for your participation. Thank you, John Novak, for jumping in and sharing your great lessons. Thank you, everybody that had the courage to post. And if you're not getting where you want to be yet, guys, I want you to do me a favor. Tell yourself it's okay to post. It's okay to be wrong. Sydney, this is your first class? Well, welcome to class. How'd we do? It's a lot to take in on day one, isn't it? There's a lot of ideas. Good. I love it. And we do the same thing every day. And the whole idea is to get you exactly where you want to be. And yeah, that's okay. Tell us to F off if we make you mad. We'll be okay. We'll try not to make you mad, but it's never guaranteed not to happen. I try not to make my wife mad. It doesn't always happen. So, Sydney, this is your class, my friend. Every time you're in here and you need clarity, jump in, ask a question. I'll stop the class to make sure nobody gets left behind. And guys, I'm going to go watch the NASDAQ for a little bit. And I'm going to see if I can find a high probability trend trade. And if it happens, awesome. And if it doesn't, no worries. I'll see you guys Monday morning. We're going to do it again. Special treat for you guys next Friday. John hasn't verbally confirmed it yet, but John will be taking the classroom next Friday. So you guys that are a little more advanced get to pick his brain and get a little extra clarity. I'm going to go down to Austin and celebrate my kid's birthday. So have a great weekend. I'll see you guys Monday morning, and we'll do it again. Be good, everybody.